Good morning, everyone.
Good morning. Good morning. Happy Monday. Here we are again.
Right.
Good morning,
It
traders.
is Monday.
Once again. And what a busy week we have ahead, right? Finally, we have interest rate decision coming up on, I think Wednesday it is. Yeah, Wednesday it is. So
Yeah,
it's
we
going
got.
to be quite interesting.
What do you think? Half a percent or 1/4%?
1/4%.
As the financial analysts say, 25 basis point.
25. I think that's pretty much set in stone. I think what Paul is going to say after this is going to be the interesting stuff. What's going on behind the scenes, of course, with the things Donald Trump is slowly installing, to kind of indirectly take over power of the U.S. central bank, the Federal Reserve, and the outlook really, because we have a unique situation. No? We have a weaker job market, which is something the Fed was waiting for. It was weaker already for some time also. The problem was once again that the statistics were wrong. Somehow, like what was that, almost 1 million jobs too many then reported. I mean, that's something. That's the stuff you get fired for normally if you work in a company as a business analyst or an auditor or whatever. And but we still have sticky inflation. We probably are going to see higher inflation numbers in 2026 when the tariffs are going to show in the data. So I don't want to be in the driver's seat of the Fed, honestly speaking, right now.
The numbers that came out, the revision, 900,000 revised down.
Whoopsie.
And I remember was it last year or the beginning of the year where they did another revision that was all-time high? And
I think that was this year now already, one time.
Right, that was this summer. Yeah, that was summer.
I remember us laughing about it and basically shaking our heads.
Yes, and not only that, but it sparked a lot of conversation about the validity of those numbers and also the maybe incompetency of the Bureau of Labor Statistics. Now, of course, I'm not an expert at that, and I did some research on it at the time of that first release, and revisions. It makes sense that they're going to do revisions because of how the surveys are structured or something like that. But revisions as big as those that were, very, very big. And now we had the numbers that are even higher. The revisions are even more crazy this time around. And now there's not really the same type of conversation about it. Now everyone's like, okay, we know.
Yeah.
It's almost like Trump has started this popular, revolution in like we have to restructure the way that the job numbers are reported and things like that. So now it's just every day something like this happens. So people are getting used to the craziness of these massive revisions.
Which is sad because, first of all, it's eroding the trust into the USA. And I mean, it comes for a reason. They fired a lot of independent contractors whose function it was to look at the statistics and see if the statistics, the reported numbers, or the numbers they want to report are really realistic numbers. So they got rid of those because they basically said, oh, we don't need those anymore. We can do that by ourselves. That was, I think, a couple of months ago. Well, and now here it seems like we have a result of that. And it doesn't fit really into what Donald Trump's normal narrative is, like, oh, the US dollar is the strongest, the greatest currency in the world. This is going to add into the fact of the eroding trust into the US economy. This is, again, also one of the reasons why we see gold trading where it is. I mean, it's a crazy world, and I never thought I would say that. It's somehow we've come on a leadership level, at least in the USA, and actually also in Europe, I have to say, to a point where mediocrity is great. And I think that's very sad. That's going to aid into countries like China, for example, getting even more ahead of us than they are already.
yeah, but we're definitely in a weird political landscape. I think we've always, I mean, in all times, we've had similar situations throughout history, and there's always been like similar situations. But I feel like the way that the world is interconnected, we've got social media, we've got the internet, everything is enhanced in a way where the bad things become even worse and the good things become better. But it's easier to spread rumors. It's easier to spread negative information. Fear and panic is emotions that are much stronger than the
Yeah.
positive emotions. So yeah, we're definitely in a situation where
And
it's
in a way, it reminds me of how the Middle Ages are sometimes portrayed in movies when somebody does something weird, and people come running out, witch, burn her on a stake. That is
yeah.
how I sometimes feel about social media.
In a sense, because you watch something on social media and they're like, oh wow, look at this, look at the facts that they're sharing in this video. This is important, I need to share this. And then you're sharing it to your friends and everyone starts sharing it, and now this video about a supposedly interesting fact, no one fact checks that, no one really
Yeah,
knows what
yeah,
that video, like where it comes from. Then all of a sudden you have a video going viral, and all of a sudden you have like created this idea of something that might be based on something completely false. Whatever. Let's
yeah.
talk about
Trading.
trading. Check this out, guys. Check this out. Look at what I have here. Look at this. Look at that.
But it's just temporarily yours, isn't it? Or is the
Yeah,
competition over already?
it's just temporarily mine, of course. You see
Oh,
it right here?
nice.
What does it say? It's
No,
gonna say something. Oh, I see my screen. Or whatever. This is the trophy. This is this is super heavy. Super heavy. It's good quality. It says right here, winner of the The5ers Trading Cup. This goes to the winner, which by popular demand should be me. I've also done a lot of hundreds of unbiased surveys sent out to investors and traders from all over the world, and they all agree that most likely I will be the winner of the trading tournament. Therefore, it makes most sense to keep this at my place because of the packaging fees and the it's going to cost a lot. I mean, imagine if LJ wins, I have to send this to Australia, and everyone says, well, you're probably going to win, so why don't you send it to Sweden instead? That's what we did. So thank you very much for the confidence.
So two things about that. First of all, of course, I'm rooting for you because you were the one that defeated me, in the first round. And of course, I want to be able to say, hey, at least I lost to the champion, and to regain some confidence for the next round. The second thing, I have to ask you for a favor. In the description on YouTube, please change the YouTube to my correct channels. The same poor guy like last time again.
Okay, yeah, I gotta do that. I will go in and I will change that right
And
away.
while you do that, I'll quickly switch over to my screen.
Yep.
Let me see. Did I add it already? I did. Yeah, looking at, we've seen actually quite some action already this morning, surprisingly. So some readjustment. Prepare for a little bit of weird moves, I think, as we approach Wednesday. I don't expect like that. The type of indicators that I'm usually using for trading nowadays, at least for scalping, that they sometimes will show weird noise of the market in general. The structure is going to be a little bit weird until we get that out of the system. What is going to happen then after the interest rate adjustment, probable interest rate adjustment of the Fed on Wednesday is a whole different story. I have an opinion on that as well. We can talk about that later. Let's quickly look how the markets are this morning, maybe. So I'm primarily looking at the NASDAQ. I'm seeing actually a long entry that I've been waiting for. So I'm going to quickly enter a little long trade there at 20,084.86. I have entered a long trade. Stop loss is 23,900 with a risk of 0.25%. So I've been eyeing on that one a little bit this morning. Already missed out on the short trade. here because I was still preparing for the day. Let's move along here. Let's have a look at gold. Gold a little bit sideways here since Friday. Nothing really that springs to my eye where I say at the moment, short term, when we look at least at scalping setups, I need to be in that. I would actually prefer gold at the moment to go a little bit lower, maybe into the region here 580 to 560. 60 look for a long signal there, but let's see that later. The third thing I'm watching today is euro dollar, which also is, if there is nothing like really that, looks like, oh, this is a grand signal, this is really something I need to trade. I want to refrain a little bit from US dollar denominated pairs until Wednesday, because I know how the guys in the institutions, the institutional traders are going to behave. They are probably very busy hedging their positions. Nobody's going to bet on an outcome because everybody knows already what the outcome is going to be. So the reaction to that on Wednesday might be different than we expect as well. So I want to be a little bit careful there with positioning. As I said, only trade just enter that one based off this signal because I've been looking for that. Expecting here on the NASDAQ a little rebound, hopefully somewhere to the region of 24,120 to 24,140. Let's see if we still already are going to see that during this session or if the market is going to rebound. What are you looking at this morning?
Well, as usual, I'm doing some of my looking at more of the higher time frames here. I got right now I'm looking at two different ideas that caught my eye. Actually, I've been looking at this for quite some time. This is GBP CHF. Before I go into the analysis, I want to show you guys something. As you can see here, this is a trend line, but it's a thick trend line, a broad trend line, and that's because I'm using the channel tool. So obviously you have the trend line tool right here, where you can just drag a trend line, but this is the thickest you can make it. Sometimes when drawing a trend line, I think about drawing trend lines in the same way as I'm drawing horizontal levels. So imagine that you have a trend line that goes through this area, but I want to make sure that instead of having to add one trend line that connects these two tops right here, and then adding a trend line that connects like these three, I want to make sure that I capture the idea of the market maybe using this whole area as a trend line. So therefore, what I'm doing is I'm using the parallel channel tool within TradingView. So this is the parallel channel, and then I've simply created a template where I have deactivated all the border lines. So basically the upper and lower parts of the channel, and then you have the 50% level, which is the middle one. So if you go to the default settings, this is what the default settings looks like, and that's of course what a channel looks like. But if I go into settings and I remove the 50% and I make this one invisible and that one invisible, and then instead I make the background a little bit invisible, you now have an area that it's completely filled. So I've saved a template for that, that template is called trendline area. And that's something to keep in mind when you're seeing my charts. And if you want to add, if you're trading the higher time frame, sometimes you want to incorporate a bigger window of room for error for a trend line. I've added a trend line here on GBP/CHF mostly to show you guys that process. This doesn't really mean a lot to price action, even though you can see generally it has reacted to that trend line. But the question is, does it matter? I'm not sure it matters. And for this trade idea, it doesn't really matter much. It's a learning, educational example. Now, what I do like about GBP/CHF here is that we can view GDP/CHF. Man, what is wrong with me today? I know what's wrong with me today. I haven't eaten breakfast. I'm gonna try this intermediate fasting again.
But aren't you supposed to do that in the evening? Like not eat starting at 4 p.m.? Makes it a bit easier, no? Or are you like an evening eating person?
Well, if you mean like skipping dinner? Yeah, but then
Exactly. Yeah.
yeah, but if I'm eating with the kids, I want to make it a family thing,
Um,
have dinner with the kids. Otherwise, I'm just gonna sit there staring at them while they're eating, and I'm super hungry. So I'm thinking it's better to skip breakfast, because breakfast is most of the time it's stressful, and I eat
I love
breakfast.
breakfast. It's like the only meal I can eat, with my family, because I'm usually home very late. So if I come home at like 9 p.m.,
Ah,
the little one is sleeping already. But anyway, back to trend lines. And I
yeah,
want to
right.
say here, really, I agree very much on it. This is very important. We always talk about trend lines, but price doesn't react like this. You don't have like, oh, there's a certain pinpoint price I can identify if it's higher than that, then the trend line is broken. If it's directly bouncing off of that, then it's resistance or support or whatever. I think you always have to give it a little bit leeway. I think even on the lower time frames, to be honest, because we see more noise there.
I think it's even more important on low time frames.
Yeah, because price likes to overshoot or undershoot sometimes, and
Yeah,
otherwise you quickly are like always in like, oh, is this a break of structure already? Isn't that a break of structure? Like this, you can give it a little bit more leeway and just accept or take into account that price is efficient, of course, but not that efficient that it will always directly divert again or bounce at a pinpoint certain price level.
yeah, no, definitely. I think it's a very important important aspect. The giving price some room for ever. Anyway, now the idea here is looking at GBP CHF. We see that we had one major move to the downside here. This is, I believe, perhaps could be. Not sure what happened here. I remember when this happened. I don't remember why this happened, but I remember when it happened. That was absolutely insane. GBP absolutely crashed versus the Swiss franc. So that was a very interesting moment. I can't remember what happened. I remember though that I bought this. Of course, got stopped out and missed like a 500 pips move, but whatever. Now, my idea here is, of course, you can look at this and say, okay, how often, what's the odds of GBP CHF trading below this level? How many times have we seen that in history? Well, if you look at the monthly, we can definitely say that GBP CHF is um, on the bigger scale here, just very, very bearish, and we've had multiple accumulation zones, or I don't know if you can call this accumulation zone, but you have ranges on the monthly where you have hit the range lows repeatedly time, and then eventually actually broken it to the downside. We now have a new range here at the bottom, and the question is, of course, will we trade lower? I think it's highly unlikely that we're going to break this level in the short term, even though the British pound looks very, very bearish. It's not really a strong currency at this stage, but maybe most of the sell-offs on the pound has already happened. Now, a couple of things here you can look at is whenever this level has been hit, we have had a fairly strong reaction. We got one right here, violent reaction. And when I say violent, I basically mean like it hit the level, and then there's a surge of uh, buyers stepping into the market and absolutely is buying this up like crazy. We had that one right here. We got this one and this one. Almost every touch of this level is a V-shaped recovery. And a V-shaped recovery tells you that there's a massive selling pressure coming into the level, but when that level is hit, it's very clear that this is a level where the market, where buyers are ready to step in, and they are doing so with full force and trading it back to the level where it previously was in most of the time the same amount of time it took to reach that level. You can see so in this example right here, where you go down and then you come up and test that level in the same amount of time it took to reach that level to the downside. Tells you that the move is very quickly getting bought up. But there are some things here in price that tells me that there is some weakness here. Even though the general idea here would be to buy GBP CHF, there are still some signs of weaknesses that we have to make sure to keep in mind. And what I mean by weakness here is, you look at this reaction. That's a V-shaped recovery. Goes down, straight up, V-shaped recovery. We also have a type of V-shaped recovery here, but this is not really a V-shaped recovery because it actually has a accumulation at the bottom. And the highs are lower and lower. Even though we have a higher low here, and that's the higher low I'm focused on, we still have to take into consideration the lower highs. Now, what this tells me is that, yes, I do think that buying GBP CHF here could be a good trade, but how far up is price going to go? I think in this case, looking at the local weakness of price structure when hitting this level, the take profit for a trade like this has to be conservative because there are some underlying weakness here in the market. So that's the broader high time frame view. Now, if you're looking at the more zoomed in look, this is on the daily. You can remove a few levels here. Let's get rid of this. I do, however, want to add an FTA up here. For those of you who do not know, FTA stands for First Trouble Area, and it's the first area on the chart where we expect price to run into resistance if long and support if short. So we're seeing a sign of accumulation here, breakout. Do we have an accumulation here, or is it just a downtrend? I think we are looking at accumulation here. What's interesting is also the area where the accumulation happens, which is right inside the reload zone, or the area, let's just say, around the 0.618. So I want to go long on this from around this level up to the FTA. Now that's the idea on the daily. Going down to the 4-hour, what would this idea look like? Now we can see that we have a changing structure right here. And I'm looking at, we're going to connect these lows and highs. And then I'm going to show you what that change in structure is. The current structure, the previous structure, tells us that we should get a move down here. That's the previous structure. Now we don't get that. We get a higher low. We get a higher high. So we can actually do this. With this part of the structure is the bullish part, the green part. And that's where we have the shift. Now, I've added the level here on the daily. We might want to adjust this a little bit on the 4-hour, something like perhaps this. And what I would be viewing then as a possible trade here, let me go in and change this high time frame level so the visibility is only on the hourly or only on the daily, like that. So I'm just going to remove these arrows to make the chart a little bit cleaner now that you know the overall structure. We can go and we can add a trendline area here again. That would look something like this. See if I can adjust it a bit. I think that would be the trendline area I'm looking at. I think we have broken out here. We're going to be closing the 4-hour candle in 10 seconds. So go down to the 1-hour. Look at what I did here. I went from the from the monthly all the way down to the 1-hour, and this is because we want to make sure that we're trading with an overall high time frame idea, or at least an overall high time frame bias. Are we trading with the overall trend? I would say it's a little bit unsure here, but we are trading within an overall high time frame structure that would support a medium-term bounce.
What time frame would you look for that trade? So how long is that? Like, what would be your target for a trade like this? We're talking about a longer term swing trade here. So it's more of a day trade for you because you think you're going to rebound very quickly to support a resistance.
So that's a good question. Now, usually what I do when I try to calculate how long the holding time is going to be, and that's important because you also have to make sure that you take into consideration the swaps, because sometimes Not swaps are not going to be super high, but it's important that you go into MetaTrader, check the specification of the pair that you're going to be trading. Sometimes the swaps are going to be different from longs and shorts. I've seen. Is that something? I've seen. I did see someone write about that, but I don't know. I'm
Yeah,
gonna
of
have to.
course, swaps are different for long and shorts because it depends which currency are you borrowing and which currency are
Right.
you being credited in. No, if you like, for example, look at euro dollar. If you buy euro dollar, you go long euro dollar. You buy dollar, you sell you buy euro, you sell US dollar. Then you have to compare like what is the interest rate environment in the eurozone at the moment. So we are around like what is that 2.75% or something, or 2.5%. USA still at 4.25%. Which means, like, if you don't take any other considerations into that, but usually, of course, you have to pay more for money you borrow when you get an interest when you have it on your account. You probably are going to pay a swap position every day because you owe US dollar and the interest rate for US dollar is higher than for euro. If you turn that around, if you're short euro dollar, for example, it can be very well that you get a daily swap because you get more interest rate for your US dollar than for the euro you sold.
That's right. So if this sounds complicated, what you can do really is just go to MetaTrader, check the specifications of the pair that you're trading, take a screenshot of that, go to ChatGPT, paste the
Yeah.
screenshot, ask ChatGPT, how many pips do I need to make in profit to account for the swaps on a daily basis? And if I'm going to be holding this for a week, how much is the swaps going to cost me? I'm going to take this in this position. You don't have to do all the math yourself. ChatGPT or whatever AI you're using can help you with that calculation. Now, what I like to do first is I like to think about the entry. Like, where do I want to enter this? What does my entry look like? What does confirmation look like? When I have that, I look at what's my invalidation level for the setup. And then after figuring out the stop loss and the placement and all of that, I then go to profit target. Now, for me, the FTA is going to be up here. But I also see that there's a very clear level right here. A level that's untested. This is where a big part of that move happened. This is a head and shoulders breakdown that the neckline of the head and shoulders have not been tested yet. So when I say I want to be conservative with the TP, I'm probably going to be aiming for that level if it makes sense from a risk to reward perspective. Now looking at the 1 hour, if I think this would be a good entry, now I'm going to look at volume and OBV and see if it confirms, then I think this would be a possible trade. But then again, you're looking at this and you're thinking, okay, I want to be conservative with my TP. Does it make sense to see a break above these levels? Because this is not the resistance. The resistance is this one. This is the latest resistance. Not this one above and not that one. This is actually what I'm seeing as the most probable FTA. So does it make sense from a risk to reward perspective to place your TP up here? I'm not really sure about that. So there's a lot of question mark around this setup. You kind of have to decide on what TP you're going to be using, and that should be based on data. You should go through your trading journal and see if you know which FTA makes most sense. But again, I mean on the 1 hour here. Now this is a trade that's based on the higher time frame. So we switch to the 4 hour. That level still is very, very clear as a TP. I do think that's the FTA. So I would have to see if I can get in on a trade where I can limit the stop loss, at least get a 2R on this one. So that kind of makes sense, right? Now for holding time, what we can do is we can just simply measure how many pips are we looking for. We're looking for 55 pips. How long has it taken GBP/CHF to move 55 pips the last time we had a bounce? So here is 55, we got around 55 here. This is 55. We can go back here. So 55 pips happens on GBP/CHF in about, let's see, I'm not seeing the numbers here. Let me go in just and make sure that I get the see the numbers, because labels should be white. Let's make them a little bit more visible. Right, so we got 55 pips for this move. It took about 1 day and 16 hours. we get about 1 day. So I think the holding time for this one took 3 days. So I would say the holding time for this one, when the breakout happens, I would say somewhere between 1 and maybe 4 days of holding this position. 1 day if it's a quick move, 4 days if it's a slow move, and then you can calculate the risk and then calculate how much you would pay in swaps and something like that. So this would be a trade that's based on the higher time frames, right? It's based on the monthly, the weekly, the daily. But then when you zoom in, you see, wait a minute, this is actually a low time frame setup right here. This is a break and retest on the 1 hour. And then you might ask, why are you not holding this position for the long run? It's very, very simple. The reason why I would not be holding this position for the long run is this trend line right here. Or you can actually see a would we call this, I think we could perhaps, this is not I guess it's a de-accelerating trend line, but we're just going to connect these highs so you can kind of see what I'm talking about. Now it's not perfect, but you can see that used to show you the lower highs right here and what the trend actually is. Because of this, there's no point of me to hold this for much longer. But what if you would see that you had maybe these highs and then you create a high down here and then a high here and then you break down like this, then I would perhaps look at this as a break of structure. But I would want to see that taken out before a clear break of structure. So I'm viewing this as neutral to bearish within this range, which means we can only just get maybe 50 pips on this, which 50 pips is not too bad if you're able to manage the risk on that.
And by the way, so if we look, I just looked into that because swaps are, in my opinion, if we talk about swing trades, always something to take into account. So we have an interest rate environment of 0% in Switzerland at the moment. We have 4% in the UK, which means if you go long pound sterling versus the Swissy, you can expect to probably have a positive swap, which is the case. So in this case, per day, you would get 0.007 pips when you are long. If you're short, you would lose 1.27 pips every day. So that's something you have to take into consideration. Of course, not if you aim like, oh, I'm going to hold this for a couple of hours. I'm going to hold this for maybe 3 days. But I mean, you know how it is sometimes when we talk about swing trades. Sometimes you can be stuck for like 2 or 3 weeks in a position like this. And if you then pay like 1.27 pips every day and you hold on to it for like 20 days, you've paid already more than 30 pips in swaps. So that's something you need to take into account for your risk reward calculation, in my opinion, as well. Because if your target then is like 50 pips, but for 20 days holding this, I'm going to pay already 30 pips. Well, then we have to ask ourselves, is that position really worth it? It's the same when you engage in a position like this on I think it's a Wednesday or Thursday. I'm not so sure about it. You already pay swaps for the weekend. Then
That's right.
Because of the settlement, it's always T+2, meaning it's now plus 2 banking days in the future where this whole thing is settled. So if you do that on Thursday, you're going to pay already on Wednesday for Tuesday, for Saturday and Sunday, meaning you have 4 days of swaps already, which when you would be short here would already be. What is that for over 6 pips? That would be over 5 pips that would be gone for you if you're short.
So it's the swaps. Is that from Wednesday to Thursday or Tuesday?
I think it's from Wednesday to Monday.
No, but I mean, when is the trip? Because there's a triple swap on Wednesday. When is that paid? Is it from Wednesday to Thursday?
No. The triple swap is paid until Monday. Hold on, let me check quickly.
Is it based on how long you're holding the position? Because
there's a cutoff for the swap always.
Okay, yeah.
Yeah, on Wednesday you pay 3 times the swap because the next settlement would be on Monday, so you have to pay for Saturday and Sunday as well the swap. This is and this can be quite something, you have to be a little bit careful there. It's not so much the case now here, but especially on some commodities. So if you trade like not really gold, but some exotic metals or gas or something like this, it can be very, very high. Not so much on the 5ers. I have to honestly speaking say they are really fair when it comes to the swaps. But there are brokers out there, that kind of sell you like, oh, you don't pay any spread here, whatever. And then they so heavily overcharge you on swaps. I've seen that especially on something like Bitcoin. Very often where there are brokers basically who charge you like 0.5% per day. And then you mention you're like leveraged by 1 to 50 or something. It's very quickly, just because of the swaps, your account is suddenly in a margin call.
And I think also no, I forgot what I was saying. I was gonna say
you should have had breakfast, I tell you, or an
yeah,
espresso at least.
I like being hungry though. I really like breakfast though. I really like breakfast, but I also like being hungry. I kind of like when the body is.
I'm only hungry for profits.
Yeah, I wanted to say something about swaps. Never mind that. Looking at GBP CHF here, I'm trying to do some volume analysis. My two go-to indicators when I look at volume is, first of all, the traditional volume bars, the vertical bars you're seeing here, and then the OBV, the on-balance volume. The way that the on-balance volume works is that if volume is bullish, it gets added to the OBV. If volume is bearish, it gets subtracted from the OBV. If there's a, I think it's if there's a bullish daily candle, that gets added to the daily OBV. If it's a bearish daily candle, that volume gets subtracted from the OBV. I believe that's how it works. I don't know the exact details, but anyway, what you can do in OBV is great for two things. Look at the divergences between a price and the indicator. Very simple. Uptrend on OBV, downtrend on price. That's a positive, bullish divergence. That's the first thing. You can also look at trend line breaks. But what I like to do the most is look at horizontal levels breaking. You can, for example, look at that break right here. The break of that level happened right here. So a break of that resistance right there confirm that the breakout happens on strong bullish market, bullish price action on that candle right here. If you look at this potential breakout right here, you do not have a proper break of that trend line right there. If you add a trend line right here, you can see that OBV did never break above that trend line right there. You can also look at this support on OBV. When that support was broken on OBV is when you had that break in price as well. So a lot of times you can actually look at OBV, and if OBV is breaking out before price is breaking out, that adds to the idea of a potential breakout. Now, with that in mind, let's look at the daily OBV and volume on first this downtrend. So what you want to see is if you have increasing volume in a downtrend, that means that the downtrend is active, it's alive, it's healthy. You're getting increased volume on the downtrend, which means that there's more and more volume, more people want to participate in this downtrend. If you're seeing declining volume on declining trend, that means that the downtrend is weakening. Same thing for an uptrend. Uptrend in volume, uptrend in price, positive volume confirms price. Here we're actually seeing that we have a somewhat of a downtrend in price right here. So we can just mark that as an overall downtrend in price. And you also have a downtrend in volume. So that downtrend in volume actually starts all the way up here. So if you add a trend line on volume, you'll see that volume is weakening, trend is down. There is some signs that there's some weakening in this downtrend, which is obvious because we're hitting high time frame support. Now, what I want to see is volume confirming this as bullish. I want now to see an increase in volume at this level as support, and potentially also a breakout on OBV. And we're getting a slight increase in volume, but we're not getting any type of confirmation on the OBV. For that, I'm actually looking at 3 days, so that's a mistake on mine. This is a 3-day. We need to look at the 1 day. So on the 1 day, it's overall the same, but we're now getting a flat volume. This is good because now it tells us that the downtrend in volume and price, volume did not confirm the downtrend, and now we're getting like not a lot of interest in here, and it also opens the door of seeing a volume spike if we get confirmation here. Looking at the daily OBV, there's no breakout here at all. Can we see something interesting happening on the 4-hour? And not anything interesting here at all. We're getting a declining volume, and we're actually getting the OBV hitting a resistance here, and we're not able to get above that one. So volume and OBV is not confirming this setup right here, which tells me that this, according to volume analysis, might actually turn into a fake out, which also, if you look at that wick on the candle, there's sellers coming in here, and this might actually just be a fake out, and perhaps this current 4-hour candle will close lower. Another thing you can do here is look for, maybe go to the daily and look at RSI or just momentum divergences. If you can see any bullish divergence between in the momentum indicators. We're not seeing anything here on the MACD. This is the MACD, this is the MACD histogram, and then you got the RSI. So nothing interesting on the daily. We're actually getting somewhat of a bearish divergence on the RSI. We do have a bullish divergence on the MACD histogram, and you can see that by, it's just a small one, but you can see that you're adding a trend line here between the highs of the MACD histogram and then two lows in price. But I would also need to see this in combination with volume confirming to really be able to use the indicators to get an early entry on this, because that's really what these types of indicators and divergences can help you with, is to get an early entry, because otherwise you're just going to be able to get an entry in price if it's late anyway. So this idea is definitely valid, and it's something I'm monitoring. I'm going to place an alert right here. But because of the way the indicators look, there's no signals, there's no bullish signals on the indicators. Because of that, I will have to wait for more confirmation.
If I may, I would like to add a couple of things, a couple of thoughts to that, because I think if we look at the Swissy denominated currency pairs at the moment, is quite a special. Those are quite, or in general, let me put it like this, looking at the Swissy is quite special for a number of reasons. Let me quickly switch over to my screen. First of all, just to FYI you guys, I've been stopped out of my long position or in the NASDAQ. Why did I stop myself out there manually? Because we didn't overcome the ATR range on that long signal. So what I want to see usually is that ATR was at 24,104 when I entered the trade. I would like to have seen us overcoming that range in order to confirm the long signal. So I stopped myself out manually there with a loss, what was that, of 0.05%. Talking about the Swissy at the moment, CHF. In general, I think I always like to do two things there. First of all, I like to look at the US dollar. Now, you might ask yourself, of course, what does the US dollar have to do with the Swiss franc? Well, the Swissy at the moment is kind of the new secure risk-off currency in the world. And you can see that by two things. So if you look, for example, at a longer-term chart of US dollar versus Swiss, so on the daily here already, you can see we are trading at a very, very low level. If I consult a weekly chart, you can see, I mean, the lowest level we ever had, and I can still remember that very well, that spiked down here at 0.705 or 705. That was more like 0.77. So we are closer to that level. But nonetheless, we can see that even since 2003, the overall trend when it comes to comparing the US dollar and the Swiss franc is down. And it's the same picture if I go back to the daily chart. You can see the levels are very low. So the level I would be looking here to see something like a rebound, honestly speaking, is maybe something like 0.75. And I think that's important, especially in the setting that we have at the moment with Trump and with institutional investors losing faith in the US dollar. Yeah, like I said at the beginning, this is also the reason why we see gold going up like crazy. First of all, of course, gold US dollar is denominated in US dollar. So if the US dollar gets weaker and gold stronger, of course, you're seeing the price going up. Now, what is important here, in my opinion, is that we take in consideration also where are we going to see the US dollar in general heading. So if I look at the Dixie, for example, this is like this arrow here is something I drew in, when was that here? 23rd of July. So this has been on my chart for quite a while. I think so far the Dixie has kind of followed the general trend of this, and you can see that I expect the US dollar by probably September 2026 to be trading somewhere around 90. So this is my overall structure. Now, if I take this into consideration, my opinion, well, we're probably going to see a weaker US dollar with everything that's going on in the USA on an economical level. Yeah, weaker job market now, interest rates are going to get lowered. Yeah, that's positive for risk on markets, but there's also always a reason why interest rates gets lowered, because something is not right in the economy anymore. The Fed somehow wants to stimulate or create a certain positive economic effect. Then we have all the craziness from Donald Trump. We have the statistics that are revised by a million jobs, and who knows how other economic statistics are going to look. So it's a little bit of an uncertainty that institutional investors or investors in general are not used coming from the USA in general. So keep this in the back of your mind. When you see like, okay, the US dollar in general is weakening, well, then something like dollars Swiss franc is like this on steroids. Because against the Swiss franc, the US dollar has even more weakened. People are flushing into the Swiss franc. First of all, because of a low interest rate environment. Second of all, because there is no real alternative. What other currency would you want to invest in? The euro? Don't know. Europe not doing so well, you know. What else is there? Scandinavians, of course, doing well. Something like Sweden, something like Norway, but too small on the grand scale of things when it comes to economic power. So it's really, really difficult. And this is, in my opinion, also the reason why I would be careful. And this is the reason why I asked you on your time horizon for your pound sterling against Swissy trade. Because if you would have told me like, well, I want to hold onto this maybe for 3 months or 6 months, I probably would have said, well, if we look at the swap, okay, you know, that's in your favor. But the overall trend and the way money around the world is flowing currently, you know, you have to be careful, probably because the pressure is going down further on this, because money is flowing out of pound sterling out of the US dollar into the Swiss franc. And this shows, in my opinion, also how complex, you know, currency markets sometimes can be. You see one thing on one chart, but you kind of forget that if you look at other currency pairs, they can paint a totally different picture. Depends on the time horizon, of course. What I just said here is, of course, not true if you look at scalping, day trading, or, you know, holding on for a week or two onto a position of this. Of course, there can be rebounds, and you can analyze them, you can find them in the way Jonatan just showed you.
It's definitely important to take that into consideration. That's something that I noticed as a swing trader, and that's one of the reasons why I've started getting more interested into, you know, the macro side of things and fundamentals, is that the longer you hold a pair, the bigger the risk. There's a big risk of holding period. Having long holding periods, it's a big risk. So
I would maybe put it like this, if you are scalping, if you're day trading, technical analysis can pretty much show you the whole picture, except you're trading around news event. That can change everything, of course. But the longer your time frame is, like a month, 6 months, a year, something like this, the less dimensional in your analysis, technical analysis can come. So it reduces from painting the whole picture, 3 dimensions or 4 dimensions, to maybe just 1 dimension, because the economic factors become more important than technical aspects. Not true for everything. There are exceptions from that as well. Or, of course, technical analysis can help you together with fundamental analysis in the long run as well. But the picture definitely becomes more complex. Yeah.
It does. So you should have. I mean, this is a big debate, of course, but I would say that on the lower time frames, on intraday, I would prefer technical analysis. I would prefer technical analysis on the higher time frames on long term as well, because I do believe that it is possible to find those repeatable patterns on all time frames. But there is definitely something to be said about what you've just mentioned about the dynamics of the Swiss franc. I mean, that's of course important to know as a swing trader as well, because then you might want to put on a little bit less risk. You might look at not holding it too far, or maybe cutting the position a little bit earlier than what you would normally do. So having 1 year to the you don't have to do really, in my situation as a swing trader using technical analysis, I'm more relying on fundamental analysis. Fundamental analysts, and then my own fundamental analysis. I'm more interested in hearing what other analysts are saying about the fundamentals than actually doing that analysis myself. And if we flip that around, what I've noticed especially when studying for CMT, is that the best type of trades, the best types of investment firms or funds or whatever, they have people that are very specialized in their areas, and then they try to get together with other people that are specialized in a specific area, and then they try to confirm or debunk their theories using their specialities. So if you're a trader that is focused only on technical analysis, it might not be a bad idea to actually pairing together with a trader that is using a fundamental analysis, because some of the best ideas that I've found is technical setups that also align with fundamental analysis. And that fundamental analysis doesn't necessarily have to be my fundamental analysis, as long as the reasoning and the logic behind it is sound, and you can fact check that.
We used to do that actually when I was working at the trading desk for a family office. We would compare in the morning, like our view, like, okay, what's my position currently? And then we would try to find arguments against that position to come out of that bias. You naturally have, when you're in a position, you kind of start filtering everything towards your bias. It's natural. You probably cannot get out of that. So you would ask somebody else, like, okay, can you find some stuff that speaks against me holding this trade into this direction right now? And it's hard, because you have to face the fact sometimes that other people have better arguments than you, that you're probably wrong. But it also strengthens you in your opinion, or that your opinion is worth something. Because what you also don't want to do is, you also don't want to go into that trap that a lot of beginner traders understandably go or fall, that they have a position and then they read something online and think automatically, oh, that person is probably much smarter than me, I should close my trade, and do the opposite. In reality, people are usually not smarter than you, at least not if you have spent some time in analyzing your trades, if you have spent some time in getting some knowledge. So careful with that.
Yeah, I mean, from a technical perspective, I have high confidence in. I mean, I'm of course very humble in the way that I'm not viewing myself as an expert at all.
You're
But
humble?
what I do have is I have high confidence in what I'm doing in technical analysis, because I've
Yep.
seen time and time again that I'm finding setups that once have played out is like all over the news. Like I find the setups and the move is happening, and then I see these research firms and like these big institutions talking about the move and talking about the technicals behind the move. So when it comes to technicals, I feel like I'm very confident in my abilities as a technical analyst, but then as a fundamental analyst, like that, I just have to let someone else do that work for me, because that is just not what I'm doing. And some people like the research, and I don't like it, because to be a fundamental analyst, you need to be good at researching events, papers, research, surveys, understanding the jargon that is central bank language, which is just a whole nother universe for me, so but there's an interesting concept called fusion analysis, right? Where you're combining technical analysis and fundamental analysis. And I think if you're a solo trader and you want to do fusion analysis, you'll probably have to do 50-50. And if you do 50-50, your technical analysis and your fundamental analysis will not be as good as if you are specified on one thing and then you let someone else be an expert at that other field. Very few people can be jack of all trades in trading.
I think I'm the living proof of that. No, if I look like how's my performance long term based on my fundamental analysis in comparison to how do I do as a scalper and day trading, my long term trading is far outperforming my short term trading by a multitude, really. But that doesn't, stop me from still trying, and trying to get better, of course. And when it comes to scalping and day trading, but I think it's very true. You have to admit towards yourself, okay, this is where I'm good at, this is where I'm not good at. Am I going to spend the time getting even better at the stuff I'm good at? Or am I going to spend time to develop my skills in other fields of trading as well, and then try to incorporate and find something what you are calling fusion analysis? This is how we develop as traders. This is how I think you develop in every field of expertise out there. Not only trading. I think that's a common truth for everything out there. I wanted to say something still, but I forgot also what I wanted to talk about. Sorry, maybe it comes back to me in a while. Otherwise, it probably wasn't that important as well. There was one question here from Camille. Why would you trade month or yearly just by Vanguard? I assume you mean some ETF or something by Vanguard. I don't know. And hold. This is true, of course, like if I look at something like, oh, my view is bearish on the US dollar from now until next year, I'm not going to short spot euro US dollar. Why not? Because the swaps are going to eat me up, because I would need to would need to buy, of course, buy euro short US dollar in that case, US dollar getting weaker, but I would be eaten up, of course, by the swaps there. So that trade absolutely would not make sense. I need to find other instruments for that. So other instruments in that case would be, for example, shorting US stocks, shorting US treasury bills, or buying an ETF that's inverse to US dollar strength, something like this. So don't do trades like this on a spot trade with your broker where you pay swaps like this. With the only exception to that is if you are trading with the carry. Trading with a carry means where you get a swap credited to your account because of the interest rate difference every day. Then we could argue about this. And of course, it's something we usually don't do here. No, I mean, we like to talk about the long-term stuff, especially me, because it's part of the whole picture. But when it comes to trade execution, naturally, we're looking at more short-term things here. Damn it! What did I want to?
I've actually entered the long here on GBPCHF while we
Nice.
were testing this a couple of times. So I'm looking to half risk on this one because it's a low time frame confirmation. We can switch to my screen and I will show you what that looks like. So on the 15-minute, you can see right here that we have that low time frame confirmation. I think because of the fact that there's a lot of confluences here on the higher time frames, but the indicators again are not confirming the trade fully. So half risk here. Once I get confirmation on maybe the 4-hour, I'll add to that. But if you look at the structure of a price reacting to this trend line, you see that that is a very nice break and retest of the trend line. It's a break and retest of the 20 EMA on the 15-minute. You also have the reload zone right here. And then on the 1 hour, we do have a 1 hour open and close above the level. Looking at the 4 hour right here, even though it closed with a wick, it came down and hit that level, and there's still some decent momentum here on the 4 hour. Fairly tight stop loss, but we'll see here. Half risking half of what I originally wanted to risk on this. I like it. We have, if this 4-hour candle closes like this or slightly higher, I kind of like what I'm seeing here, but we'll see.
Me too. I think it's a great trade, really.
Yeah, I like it.
Yeah.
We'll see what happens. I'm gonna not look at the chart too much. I think that's one of my best risk management advices is just do not look at price.
Yeah, kind of get because otherwise you're probably going to see things that are not really there. I can only highlight that as well. Guys, if you haven't done so, please leave us a like, subscribe to the channel, and leave us a comment what you are currently trading, for example, so we can have a look at some of your trades maybe as well and give you our opinion on those. I think I saw somebody earlier talking about Canada against the Japanese yen, because we have some Canadian news also coming in. If I'm not mistaken, they should have interest rate decision as well on tomorrow, actually, already Canadian interest rate decision. I haven't seen a forecast for that yet. However, interest rates in Canada are very much lower at the moment than they are in the USA. So we are at 1.7% there at the moment. What am I seeing here? Do you have an opinion on CAD yen at the moment? Because I don't, honestly speaking.
Let's take a look. Yeah, definitely. It's a breakout.
I mean, yen is interesting anyway, always at the moment.
Is it CAD yen that has broken up? No. Okay, so Canadian JPY. No, I honestly I have to think. So this is actually a great opportunity, great example of why. So you can see this is my green list. So usually what I do once a week or maybe a couple of times every week, I go through my whole list of all the pairs I'm watching, which is a lot of pairs, and then I add the best ones to the green list. And there's a reason why this is not on the green list, because when I look at this chart, and this is why I'm better technical analysis than I am a fundamental analysis. I simply just look at the chart and then I try to see, like, what am I feeling when I look at this. If there's just if my mind is just blank, there's nothing here, and I move on. I don't have to dive deep into the analysis of this, because I look at this and I feel like if the setup is not obvious in the first, 20 seconds or maybe even less, then I probably want to move on. Now, there is something to be said about this support. Let me just add something here. So maybe I don't have to go all the way back here, but there's something to be said about this support and a possible break of this support, I guess. But we're far from that. If I had to do some analysis on this, I could add look at people look at volume. Not really telling me much. This is also not telling me much. Yeah, For me, there's just nothing here. There's just nothing here.
Yeah, if you allow me to add to this, I agree with you, and I also want to point something out here. So if you look here at CAD yen, for example, and when I switch over to dollar yen, not really much difference in how the chart looks, right? Pretty much moving at the same speed and scope, so to say. Now, of course, I would need to go more into detail then when look at dollar versus CAD as well to really prove this. But if I see something like this, I switch between charts and see like, well, I mean, they pretty much look the same. My decision is always then, or I ask myself, why do I need to trade the less liquid currency pair, being CAD yen, if I can trade the high liquid currency pair, being US dollar yen in my case, because they pretty much move 1-to-1. So my analysis would be here more on US dollar yen and how to go about this. Now, again, you have a look like you kind of scan the chart where are obvious levels of support and resistance. Now I'm using lines here, use more like the broader lines or channels like Jonatan was teaching you earlier in the beginning of the session, and the most obvious levels longer term here are at the moment for this. So I'm asking myself for swing trading positions. Honestly speaking, I would rather wait even until we are here, maybe not 151. I would lower this maybe to 150 or 151 even, to the even number, to wait until we are either up here or down here at 141 to see some price action. Now, I'm not talking about, again, here, like day trading, scalping, looking at 5 minutes or 1 minute chart. Picture is going to be completely different there. But from a general point of view, where are we right now when we look at this chart here? I would say, well, if we're not going above this or not going below this, I don't see any reason right now to do something like this. I especially do not see any reason to trade CAD yen when dollar yen is showing me the same picture. I think this is a good example of how sometimes it's, and pardon me being so direct where it doesn't make any sense to trade currencies out of a second row, in my opinion. So I rather would concentrate on the major currency pairs before I look at something like CAD yen. Might be different if I have an opinion on how US dollar versus the Canadian dollar is going to move. Then CAD yen, of course, could be the better pair to trade. Maybe I'm expecting the Canada dollar to be the weaker currency, or the stronger currency. But in general, for me, there's no reason to trade at the moment, at least CAD yen, if I can get the same picture when trading US dollar yen. And I mean, we can have a look here at, I don't know, do I have it here? Yeah, I have dollar CAD here. We see why. It's not like for currency pairs, not that much movement to the upside and downside. They kind of like to meet in the middle most of the time. Middle not being parity here, by the way. Something I had to learn the hard way, by the way, because I remember back then I also used to trade and have options positions in like 30 currency pairs until I sat down and analyzed and had to admit to myself that everything can be pretty much broken down to how's the US dollar moving, how's the franc moving, how's the euro moving, how's the yen moving, how's the pound sterling moving, and how is the Aussie moving. They are called majors for a reason.
Yeah, I think I don't really look that much about on correlation between pairs. I do, of course. I do look at it, but I don't really have a structure for it. I don't really have a framework for. Let's put it this way. I'm not really sure why I'm looking at it, but if I'm going to take a trade, for example, on GBP CHF, I want to kind of look at all the pound pairs, all the CHF pairs to see if I'm going to go long on GBP CHF, is there a general strength in the pound market? Is there any other pairs that I might trade instead? Like, for example, if I see a trade on GBP CHF and GBP USD, I would of course go with GBP USD.
Absolutely, no. And also, like in the trade you just did, you probably, if you would have seen pound sterling weakness in other pairs and against the Swissy, that's maybe the exception. you probably also would have thought twice, am I really going to choose this long position now, or is the likelihood that pound sterling versus Swissy is going into the direction of a main trend pound sterling has against other currencies? Maybe that's higher, maybe I shouldn't trade it, or maybe even I should consider a short position in it.
Yeah, so there's definitely some validity to look at correlation there. We have a question
Not only some. That's the if you want to be successful in forex trading, this is what you need to do, and this is what you need to learn.
Yeah, we got someone asking about the Euro USD, and I'm currently looking at USD, so I'm thinking I might as well switch over to my screen and show you guys what I'm looking at here. People are saying long on your USD. There's a breakout here, so if you're a breakout trader, that's a good trade. That's a breakout. Well, maybe not. That is a wick right there. But if you are the type of breakout trader that wants to get into a position as soon as a high breaks, which is a valid strategy, don't get me wrong. It's that's how breakout starts. So if you're a breakout trader, you get in on a breakout. Simple as that. And this is a breakout. Now, does it turn into a fake out? We don't know if this is going to turn into a fake out, but what we do know is there can be signs of fake outs. Now, the first sign of a fake out, I would say, is this candle right here. That is, you have the wick to the upside is bigger than a candle, the real body of the candle, and it's way bigger than the wick to the downside, which tells us that there's the mark. Let's say that if you look at this from a daily perspective, let's say that the market opened bullish, and then it got sold down throughout the day, throughout the session, and then closed lower. This tells us that the forces between supply and demand within this session tells us that while the beginning session was strong, the sellers came in and closed the session bearish and regained control. So a breakout like this, and then we can of course add see if we can do some volume analysis on this. We can see that, okay, OBV is breaking out. That's nice. That's a breakout on OBV. I would say that confirms the breakout. Volume, however, let's look at the low time frame volume, not confirming the breakout right here. You can see that volume is getting lower and lower the closer price. So all the way from here, volume is actually getting lower, which tells us that there's not a lot of interest in this breakout. Looking at the 1 minute, I mean, not even on the 1 minute are we getting a decent volume spike right here. So I would say this is not the type of breakout that I would want to be buying on Euro USD. Now I'm actually looking at a potential short on Euro USD on the higher time frames, because as you guys might know, I'm also looking at longs on USD. Now Dirk's going to be laughing at that, saying like, why are you on long? And I agree with that, because like I released a newsletter.
On the contrary, sorry, I also look for euro dollar longs.
Yes, and I look for shorts.
So because you just said, why would I look for euro dollar longs?
Okay, but
you're looking for short. Still not laughing at you, but I can tell you, of course, my reasoning. But you please continue first.
Yeah, I mean, so I don't have any fundamental reasons at all. This is strictly technical.
Which is okay. You're on the technical side looking for short-term trades. There, no need for fundamentals.
Let me also shield my newsletter for all of you. I have a free newsletter. I do have a link in the description. I don't usually say this, but now I did, and that's because I have actually. It's all free. I think I can promote that because it's all free. I'm not selling any products or anything like that. I've shut down my community, blah blah blah, all of that. But I wanted to find a place where I can share my analysis in like a structured way. So a Substack newsletter, I think is the best way for me to share my analysis in a structured way. I've tried so many different things, Twitter, Discord, Telegram, all of that. But I feel like having a Substack and newsletter where I can just very organized and structured way of delivering my analysis. Anyway, I released this weekend. I talked about a potential bottoming scenario on the dollar, based on this chart right here. However, might be the case that accumulation can go on for 100 days more. So we might see the dollar, and I would actually argue that we might even come down and like take out that low. Let's see if I can get a what did I do now? I mean, we might even take out that low. So we're looking at maybe 1.5% move to downside on USD, which is it's quite a big move to downside anyway. So that might be the weakness that we could be seeing. Then of course we might even see a move all the way down here if the all the doomers out there gets it the right way on USD, maybe get a move all the way down here. But from a technical perspective, I am looking for USD strength if we're going to be in this, if we're going to continue trading in this channel. We might break down. Who knows? I don't know. And because of that, that's one of the reasons I'm also looking to go long on USD CAD. And I'm also looking for, of course, a distribution range to be formed on Euro USD. Now, what I'm thinking is I have two options in mind here: either short here or short here. Okay, this is dollar weakness. If there's dollar weakness, like pretty much every analyst out there is saying dollar weakness, all the banks, all the analysts, everyone's saying like the dollar is weak. I agree with that. I've looked at the fundamentals. I understand why the dollar is weak. But if we have confirmation of a distribution range right here for Euro USD to either go down here or down here, I'm going to be taking that trade. However, there is a very clear invalidation to this idea, and that would mean that the dollar breaks down. That's the dollar currency index chart I showed. If that breaks down, Euro USD might break out. I'm not going to long USD, but I'm definitely looking to short it then at these highs. So it's basically just a question of pointing out different types of path for price action and looking at what would confirm either scenarios for that.
This is such a good currency pair, really, to showcase also how you can use technical analysis on longer term charts to get an idea, where could be zones of where price could go against the current momentum, in my opinion. Let me switch to my chart. So euro dollar long-term chart now, a daily chart here. I want to close this so we have a broader chart. Now, if I just look at how are we recently doing, just at looking at this, I mean, it's very clear, we are looking at a positive structure, a bull market structure where the US dollar gets weaker and euro gains strength against the US dollar. So if I just look at this now, I would always argue I want to look for long re-entries into the direction of the primary trends. Now, where are, for me at least, as an option trader, re-entry points into this? They are primarily at the so-called bull market band. So we saw a bounce here. This works for Bitcoin. I talk a lot about those when I talk about Bitcoin. They work on almost every chart I've seen in my life. If you have an established trend, that is, if you're not in a sideways trend. So the last chance for this was end of July, beginning of August, when we dipped down to 114. And I actually did sell an option there also. The second, if you're more short-term interested and you're looking for those short-term scalping entries, the 8 weeks moving average, which is the blue line, important weeks. This is a weekly moving average on a daily chart. Do not use a 8 days moving average, please, for this. Are also very often good zones of support and resistance or re-entry points. Now, you will notice here that recently euro dollar has quite difficulties to go higher than the 8 weeks moving average. And we can ask ourselves now, of course, what might be the reason for this? And the reason, apart from economic things, uncertainty, and so on, might be actually stemming also from a more technical point of view. And this is what I mean when I say about you can also on long-term charts use technical analysis to kind of try to time your entries, or to at least start being careful at certain price points. Because if we look at the whole structure here, so the whole bear market, we've seen post-COVID kind of stuff with inflation ticking higher and so on, from pretty much beginning of January 2021 all the way until end of September 2022. So where US dollar basically ruled the world, where we were in an extremely risk-off scenario. And we just look at and connect those two areas and look at the Fibonacci levels. You will notice that the current level that is aligning here with where we bounced off is the 0.786 Fibonacci level of this whole down move. This is, especially Fibonacci levels, how they can beautifully add confluence and kind of help you answer the question of, hey, why do we have so much troubles here? Why is it like difficult maybe at the moment to exactly now go long? Why should I maybe wait until for a long position, at least until we dip at least to the bull market support pins, which are trading around 115.65 at the moment. So that's like 200 pips lower than this. Or maybe the better thing would be here actually to wait until we really break over the zone and then see a bounce back to the downside, and then entry on this when we had a confirmed breakout to the upside. So this is why I said I think it's totally valid at the moment to say like, hey, I'm going to prefer a short trade here, because we have such trouble going above this resistance zones of confluence that we've naturally formed there. And but like long-term, midterm, I would not actually be the one now looking for the short trade. I would be the one now waiting until we tick lower either to go, then choose the long trade, be it with a spot position. My preferred instrument, as I said, would be an option position for this, or wait really until we break out over this structure also here, with this double top we had, and then come back to then bet on, okay, we are going to bounce to the north to what probably can be the next level, which would be the high then, so the 1.0 Fibonacci level at 123.50 roundabout. I think a great example of, how you can, even if you look at things longer term, how you can still use technical analysis to kind of find confluences on the chart, to kind of find areas where maybe you should stay away first and wait how the structure plays out before you make your bets.
Yeah, I like that.
The yellow indicator, that's the so-called bull, these are just moving averages. They are called bull market support bands, and are just, I can add them here also, the titles. It's just exponent. I can hold on a second here. I have two inputs here exactly. So these are here weekly moving average. First one, which is the yellow one, is the weekly 20 weeks simple moving average on the weekly time frame. The yellow one, the red one, sorry, is the 21 weeks. Also simple moving. Actually, one of them should be an exponential moving average, but it doesn't really make a difference so much here. You can also find these if you go here on TradingView and you search for bull market support bands. Yeah, the 21 weeks should be an exponential moving average. I got this wrong on my chart, but doesn't play really a crucial role in my opinion. So you can also choose that, add it to the charts. I like those indicators in all trending assets because they show you really good zones where markets are likely to rebound into the direction of a trend. Not always, nothing is 100% perfect. Sooner or later, the break of structure is coming, but they allow you to enter a trade into the direction and place a favorable stop that gives you a good risk-reward ratio then also.
Moving averages is, I mean, a lot of people say it's, it's easy. It's I've seen comments saying like, "Oh, you're trading with EMAs. You're such a beginner trader. You don't know what
Noob.
you're doing." But moving averages is a very simple calculation. A simple moving average is just a 20-day simple moving average. You look at the price of the 20 days, and then you divide that by the number of days. That's the average price throughout that day. You add that to the chart, it becomes a line. It's one of the most powerful things in technical analysis, because you can just put on a line and then you see the trend. You see right away, what is the trend of this asset? Is it up or down?
Yeah.
It takes 1 second, okay? And then what's also interesting with an EMA is an EMA is also a trend line. It acts as a trend line as well. And a EMA crossover with added indicators is one of the simplest yet most powerful way of trading. I am currently working with developing a trading strategy, a trend following strategy based on a EMA crossover and ADX. So a specific EMA crossover when the ADX is high enough. So ADX high means a trending market, and if there's a cross in the EMAs, and there's different time frames. So, for example, if there's if ADX is high on the daily, and there's a EMA crossover on the hourly, you can take that as a signal, something like that, and it's super powerful.
And EMAs, and again, euro dollar is such a beautiful chart to showcase the advantages and disadvantages of EMAs. Is because you see here, if you have an established trend, and let's say, I think latest here in the downtrend, you would have known like, oh well, this is a downtrend, and you see every time price goes up into the zone between the EMAs, it was a good place to short, in this case euro dollar again, until you see a break of structure, which was marked here by a new higher low. In this case, it would have been actually. Doesn't work when we're in a sideways trend, so be careful with this. But I agree with Jonatan, it's a simple instrument in a trending markets to identify here might be a good area to reinvest into the markets. Some of my more short-term trading strategies that I'm working on actually use a lot of EMAs. They might not look so much on, using the EMAs for identifying what the trend is. They look more on what is the slope and the angle the EMAs are trading towards each other. You can get a lot of information out of that. Let's not forget that every indicator, at least here on TradingView, that be it an ADX, be it ATRs, moving average, RSI, MACD, you name it, they are always a derivative. Well, you know what I mean. They're always based on price, maybe sometimes volume if you have that information available, but it's always displaying price or a price series in a different way. And I would agree now with you saying like, not you, Jonatan, but with somebody saying like, oh, EMA crossover, that doesn't work anymore. Yeah, that probably doesn't work anymore. Why doesn't it work anymore? Because everybody's looking at it. But you still can find an edge. You just need to look at the markets in a different way. And you can start with that actually. Now I know what I wanted to say earlier again. So it came back to me when you said, oh, I'm on the 3-day chart here accidentally. That's also something valid to do, to switch like from, hey, I don't want to look at the daily chart. I want to look at something like the 3-day charts. I don't know how to select that here, honestly speaking. But it's something you should do. So short term, for example, here on the NASDAQ, which I'm currently using to train myself, to scalp the US indices, I have a Renko chart, I have a 3-minute chart, I have a 5-minute chart, and I have a 10-minute chart. Why 3 minutes and 10 minutes? Because I don't want to look at exactly the same structures that other people are looking out there and probably are faster in executing than me. I want to have an advantage, and I can find this advantage by looking at time frames that not everybody out there is looking at. And it's the same with something like an RSI, with something like moving averages. If you use them in a way that not everybody's using them, you can actually find your edge with that. It's totally legitimate, in my opinion.
By the way, for those of you joining, check this out. Got it right here. The 5ers trading. Well, let me come on, fix the zoom. Anyway, here it is.
It's
Got
so
it.
beautiful.
The trophy.
Next time it's mine.
Yeah. Look at this. It's so shiny. It's so nice. So I got the 5ers logo right here and it says the winner, the 5ers Trading Cup. And yeah, that's the one you're gonna get if you win the 5ers trading tournament. We have matchups coming up, and not today. I don't think we have one today, but we do have. Let me go in and actually. I'll see what we got right here. All right, so we have.
While you look, quickly want to answer this question or this comment here. Semsha saying you could argue that Heiken Ashi gives you the same information at EMAs. Absolutely agree with you. I super much like looking at Heiken Ashi charts because they are same like the Renko chart here, filtering out much better the trend. You need to be kind of be careful to trade on them because your execution price is going to be different always than what the chart is showing you, because the chart is showing you averages. This is the only reason why I prefer, for example, Renko charts, but Heiken Ashi, super valuable. If you look at the Heiken Ashi charts, I mean, you suddenly see like, wow, suddenly the moving averages that I even might apply on a Heiken Ashi chart are showing me a much better information than when I apply it on candlestick. That's a great example of looking at the same information, by modifying at the way you look at it. Sorry. You wanted to
have a question here. Ask about the VWAP. Does it work? Yes, it definitely 100% works. It's mostly used in the in the stock market, trading the stock market. But the volume weighted. Okay, so what is this? It's a volume weighted moving average, basically.
Volume moving average price. Oh, yeah.
Yes, it's sort of like a moving average that is affected by the volume. Now I know I can't remember the exact calculation. I've studied VWAP in CMT. Obviously need to brush up on my knowledge on that, but it's basically I think it kind of like calculates it looks at the average price and then it's weighted by volume. So the average price where the most volume was traded. So you can kind of look at the VWAP and say, where is the best place to get into the market with the best trading conditions? We're talking about where can I expect the least slippage and things like that. Where can I get the best available price? Now, imagine if you're an institution that is looking to accumulate a specific position and you're going to be buying, let's say, a couple of okay, so let's say you're going to buy $1 billion worth of a specific stock. Now you can't just go in with $1 billion and just press buy if it's a fairly low cap stock, because that's just gonna you're gonna get a bad feel and it's just gonna destroy the chart basically, and it might not really help you in your in your plan. So you want to divide that up into several smaller pieces of buying. Now, where do you want to get into that position? Well, if you get in as close as possible to the VWAP, you're going to be able to get the best fills and the best conditions for that buy. So the VWAP is used by institution to see where they can get into the market at the best price. And then, of course, because it's used as for institutions, it's also used as day traders to trade around. So if price is in an uptrend and it's below the VWAP, you might want to looking at buying up to the VWAP, because you know that once price hits the VWAP, you might have a lot of big sellers or big buyers getting into the area, and then of course that acts as the support and resistance. So very powerful. Is it useful in the forex market? I don't think so. I really don't think it's useful in the forex market, but I have to look that up because obviously. Yeah, Dirk just wrote the VWAP is cumulative volume divided by cumulative, what's TVP? I think you're muted. I can't hear you.
Yeah. So typical price and typical price volume, you basically take your, what is that? high, low, and close divided by 3. This is how you get the typical price. When you multiply that by volume, this is the TPV, so typical price times volume. And then you adjust that for the period you're looking at, which is called cumulative typical price volume. So your VWAP then is the cumulative price typical price volume divided by the cumulative volume. So how does the total volume compare, and how does the current volume compare to the time span where you're looking at? It's a bit complicated. It's a lot like Heikin Ashi when you take volume into consideration as well, in my opinion. But nothing I use. So I had to look that up just now as well.
Yeah, I like how we're looking things up, and then this is what it is, and then someone asks, but what is that? So wait a minute, I have to.
Yeah, but this is how you learn, no? I mean, this
Yeah,
is something I always do, like, oh, I don't know what that is, and let me quickly look it up.
Yeah, no, it's very naive also to think that even someone with a lot of experience in technical analysis would know every single word and every single concept in technical
thousands and hundreds of thousands of indicators. Yeah. Really.
Who created the RSI and where was he born? I don't know. I have no idea. I know that. Well, I should know. The creator of RSI
was her strength, Mr. Strength.
Yeah.
Mr. Index.
Yeah, and his son was called Relative.
My name is Relative Strength. My brother's called Index.
No, I should know that. I've studied who did that, but I don't care. Like
I think I once read about this also in a technical analysis book when I was still very young, but this is always, where something like ChatGPT comes in handy. Quickly look up like, oh, hey, how's that? Calculated. What does that mean? Who invented it? I super like using language models for stuff like this. If the question is not too complex, because obviously then sometimes you get wrong answers as well. So if it says the RSI was invented by Dirk, this is wrong. It was my grandfather. No.
Right. Right. Okay. So let's see what is going on in the markets.
Yeah, we haven't looked at gold actually today, have we? I mean, this morning I mentioned something, but that I wanted to wait a little bit until we go lower again. Not happening at the moment. Ties into what we saw. I saw a comment earlier that sometimes it's better to wait for the New York session, which in my opinion is very true when it comes to gold. Yeah. This is something we suffer here on the Monday morning stream a lot from sometimes. Sometimes quite often, that people say, hey, I want to trade gold with you guys. I want you to trade gold. And then you just don't find entries because you have really not much movement. Although, of course, it looks great on this chart, all those long and short signals, but we are talking just about like $8 or $9 of movements. If we were still trading at $1,000, of course, $8 or $9 of movement would be quite a significant move. But I mean, we are closing into 4,000, so it's not the same anymore. It's hard to break in.
But if you had to take a guess, do you think gold will break to the upside or to the downside? So basically, when I say to the downside, or like what, it's difficult because I mean. Gold was trading sideways. It had a massive breakout. Then it was trading sideways for 130 days all of a sudden,
This is what gold always does, no? I mean, this is what we've been talking about pretty much for a half year now as well. Hold on a second. I need to put this to auto. That we have always in gold this, this times I should... No, I can still use that one where we have like... I don't know, call them triangles, call them whatever you want. I call them compression zones where volatility slows down. We are kind of in it's really a volatile sideways move. We saw that again. And then we suddenly see the breakout, compression, breakout. And I have a feeling right now, the higher we get in gold, the less time we spend in really this moves to the next upside. So what took here from March really until October 2024, that is, to reach the new all-time high and to enter the zone of compression was during the last time already much shorter. That only took us 4 months. So I wouldn't be surprised to actually see something like, okay, we've entered already the next zone, where we kind of have this compression zone again. I would like to mark them as a triangle, or ascending, descending, doesn't really matter. I don't believe in that anyway, or at least I don't use it. But could be a sign of exhausting markets. But my guess, as long as that persists, and as long as economically speaking, we are in this area of uncertainty where people are moving away from the US dollar, nothing speaks against going higher. So my bet, if you would put a gun on my breast, say like, hey, you have to choose a position right now in gold, my bet always at the moment would be on long.
Yeah. And that's the answer I want to hear, because if you would say short, you better have a very, very good fundamental reasons to do so.
Fundamental, or you see something in the microstructure on the 5-minute chart, 1 hour chart. Okay, there's the difference again. But long term, and sorry to steal the word again from you, Jonatan, absolutely, there's no reason why it should go down immediately. Very, very dangerous to go short, and especially hold on to short positions there.
I can't believe I missed this signal, but if you look at gold, we had. I mean, I can't believe that I did not buy gold. I'm definitely. Sometimes I feel like I'm definitely fearful.
I've been telling myself that since we passed the $2,000 mark.
Yeah, well, long term, I've been long gold for a while. I do have. We've talked about your long term investment, and it's. Of course, we're in a scenario now where it's fairly easy to make money if you're invested long term, because everything just goes up. But I have my portfolio is consistent of, and we also had someone commenting on Vanguard. So I have my biggest holding is the Vanguard S&P 500 ETF. That's 40% of it's 60.
I don't know.
I can't remember. It's okay. So it's 60% is in Vanguard's S&P 500 ETF, and then I have 30% is in I think it's VanEck Gold ETF, and then 10% is in Bitcoin, the VanEck ETF. So that's the
you can buy Bitcoin ETFs. Is that a future ETF?
Yeah, I don't know.
Because in Germany we cannot buy the spot ETFs.
Oh, that should be. Well, that's actually a German ETF, so it should be the future one.
Because I mean, it doesn't make sense in Germany anyway. Because if you buy Bitcoin spot and then you hold onto it for over a year, your gains are tax free in Germany. So that's if you would buy it in an ETF form, you always have to pay 25% tax on your gains.
Right. So holding spot Bitcoin on your own wallet is you don't pay any capital gains. So interesting enough, today I actually broke all-time highs on the long-term portfolio. So that's pretty cool. That's a 4% up in the last 2 months. It's pretty good. But let me see which. So I have the Vanguard ETF. I got the VanEck Bitcoin. Okay, so it's an ETN. It's not an ETF.
Okay, that's the reason then. Yeah. Okay.
Yeah. But I have the iShares Physical Gold ETC.
I like iShares. I think they make great. You can say what you want about BlackRock, of course, but I think their ETF products are really good.
Yeah, you're like it as well. Oh, okay. Oh man, I'm getting hungry. I haven't had that breakfast.
Did you have a coffee at least?
Oh yeah, of course.
Yeah, okay,
without coffee, I would be like, without that coffee, I'm slowly dying. I literally am like.
By the way, I hope I'm not going to be cut off because we have a thunderstorm outside right now. It's like the world is ending.
Oh, I see how it went. Because I was going to ask you, why is it so dark all of a
Yes,
sudden?
really, and I don't have the blinds down on the window today, so it's really that dark.
Well, it is that thunderstorm period right now.
It's I don't know. It's the whole year has been crazy. Summer has been cool here. Normally, like August, the beginning of September, we still have like 30 plus degrees here in Berlin. This year, it's like today it's like what 14, 12, something like this.
I yesterday, I heard my fiance was putting my son to sleep and or to bed, and then I'm sitting in the living room and it's like there's this huge flash. Like it's totally quiet. It's not raining. There's no thunder, nothing at all. And then all of a sudden, the whole backyard is just super bright, and it's so bright. And my son actually wakes up in his room because his whole room is. And then, like just a couple of seconds, there's this like massive thunder.
And then during the flash, you look into your backyard and when you see somebody standing there.
Yeah, exactly. Yeah, wow.
My daughter liked to do that when she was younger still, and she would have still that, in the middle of the night coming to our bedroom, and we have a night light in the room that is in front of our bedroom. My wife's in my bedroom. And then, because she was always shy, like asking if she would come in, you would wake up in the middle of the night, and then you would just see this black silhouette standing in your door frame with long hair, like from the grudge.
Wow.
Like it's like I think that cost me like at least 10 years of my life.
Yeah, man. Sometimes I walk in to check on my son before I go to bed. I check on him, and a couple of times I go into his room and he's sitting up in bed, just sitting and staring at me. And I'm like, what's wrong with you,
And then he speaks in old Babylonian tongue or something.
Come on.
Oh yeah, okay, guys. We're back to trading. And
I want to show you something. Okay, I want to
show us something. I'm running out of ideas. Really, I'm waiting for New York to come in. Really.
Okay, let me show you something. This is the daily. Let me put.
What are we looking at? Gold. Okay.
Yeah, we're looking at gold. This is on the daily. We actually had. So I can't believe that I did not buy gold here. It was actually one of the most obvious buy signals, obviously in hindsight, but still very, very obvious signals on OBV, and gold actually broke into new all-time highs on the OBV right here. Okay, so that was very early. Okay, broke out, had that bullish momentum right here, broke the OBV to the upside. That was quite early. Then it came down, and it hit that reload zone, formed a daily bullish engulfing, and then as you can see, OBV did not fall below that level. Even if price came down, it never managed to get back down into this range. OBV is still at that all-time high, and you can see from all the beginning in that daily bullish engulfing, you had that surge in bullish volume.
You know what? I remember you talking about this a couple of weeks ago. I think on a live stream both of us did, or another one where I was just in the audience, but I remember you talking about exactly this.
Yes, and do you also remember how it didn't enter?
I don't remember the reason you didn't enter though. What you were waiting for?
So the reason I didn't enter was because I just started looking for reasons not to be bullish, and then I forgot about the whole idea of it's okay to lose some money. It's okay to lose whatever you're risking. It's in a very big uptrend. It looks very strong. There's a lot of momentum here. It's okay to take the risk. It's okay to take the risk. And for some reason, I just did not want to lose anything.
But that's sometimes how it is with assets that are like doing one all-time high after the other all-time high. The higher they go, the harder it's to believe that they can go even higher than this, This is why in trending markets like this, a lot of not only beginner traders, I mean, I can like say that for myself as well. They become contrarian traders. They think that, there's a new all-time high. I should short this all-time high now because the likelihood is higher that we go down again. When in reality, the opposite is the truth. Very difficult to get that out of a system, I think.
I mean, there's something called price discovery, right? It's when something breaks into new all-time highs, and we call it price discovery because now the market needs to go on a mission to discover what the value of this asset is. And if you come in and say like, okay, price is now in discovery mode, and I've decided that it's too high. I've already discovered what that price is, and I'm going to sell it. That goes against the whole idea of the mechanics behind price discovery.
That's such a nice way to put it. I've already discovered what the price is.
Yeah.
I like that one.
So, Bitcoin breaks into new all-time highs. We're now in the price discovery phase. And there's someone he's been trading for 3 months, maybe got one payout from a platform. It's like, hello everyone, I know exactly what that new price is for gold, and I'm gonna sell it.
Yeah. Reminds me, I have this one friend who texts me every 4 years. I mean, I only have 2 examples for that now, but I'm waiting for this to happen again. Close to the all-time high. Hey, should I buy Bitcoin now? And after that happened the last time, I swore to myself, if he texts me again this time, this is going to be my prime indicator that the all-time high is really, really close.
Yeah, no, I also have a couple of friends that are like, oh, how's it? Well, I have a few friends that they send me a message when the market is dumping, because they know like I'm doing this full time, and a lot of them I think they tried trading and it didn't work, so maybe they're a little bit like, oh, the market is dumping, now I'm going to check out on him to make sure that he's suffering, and like, how are you doing? The market is dumping, you're losing all your money. I'm like, nah, it's okay, I've already sold, I'm looking to buy. And then they're like, why are you buying? And I'm like, well, you should be buying too. You should be buying here. This is where you should get into the market. And when I get those type of messages when people are looking, like asking me, how am I doing looking at the market? Because people assume that if you're trading, then you're losing a shit ton of money when the market is bad. But on the contrary, that's where most of traders make money, when you have the volatility and when you get the reasons to go in and buy the bottom.
That reminds me always of our live streams we did when Bitcoin was trading like 16K.
Yeah, wow.
I'll never forget this one comment. No, it's going down to 12 or 10K, and then I'm buying. I don't remember who that was. It doesn't really
I remember
mean
that
anything,
well.
but that is like ingrained into my brain. And
everyone was just saying, well, there's a lot of people that were saying Bitcoin was going to go to 12K. We had that big influencer as well saying 12K.
Yeah, right.
We had that massive influencer saying like Bitcoin is crashing on 12K. And I remember a lot of people in our live streams were saying like, I'm going to be buying at 12K. And basically, I think what we said was basically, you guys are stupid. You just buy Bitcoin here. Like, just buy Bitcoin. And I remember looking at the charts, and we said like, it's at the lows. We got we got the MVRV C score. Everything's pointing to buy. But even then, people were looking at lower prices.
And that's the thing. Sorry, go on.
And when accumulation actually confirmed, they were asking, when can I enter? I'm like, what are you talking about? When can we enter? If I had the money, I would plaster up billboards all around town saying like, buy Bitcoin, now's the time to buy Bitcoin. And then everyone's like, well, I think I'm going to buy lower. And then it breaks out. And I'm like, when can I buy Bitcoin?
Yeah. So and that's the thing, no? I mean, it's like if you look at the price target, and I know you were talking about 100K back then already, and does it really matter if you buy at 16K or at 10K? I mean, with a percentage return, it does, but it's probably going to be, for a lot of people, life-changing money. And even if you bought at 25 or 30K, 30K was when I started buying, by the way, all the way down to 16K. And it doesn't really matter then, it's like you're not going to beat a return on investment like this in the next, with any other asset, looking at a time horizon of like 2.5 or 3 years.
Yeah,
I'm definitely looking forward to doing that again at probably that time around next year.
Yeah, I think the the industry and the whole dynamics around Bitcoin has changed a lot. I saw Arthur Hayes did an interview. I really need to look at that one. He said that it might be the end of the 4-year cycle. You know, the
I heard that 2 times before as well. Yeah.
I want to really get into that interview. You know, for those of you who don't know, Arthur Hayes is the founder of BitMEX, and he had some really good analysis back in the day in 2017, 18.
Guys,
Yeah.
we have Rich in the background here already.
Yeah, Richard.
Do you want to join us, Rich?
Richard is Richard. Rich is.
Oh, sorry, Richard. I'm sorry. We have so many traders.
Yeah, so many people.
I only stream always with you and LJ, so I don't know anybody else. Richard,
What's up,
how are you
Richard?
doing, man?
Hello. Hello.
How is
How
it?
are you? I'm good, and you?
Always great. Always great, especially when seeing you.
Oh, that is very kind of you. That is so kind.
So we got Richard. We got Samir is supposed to be coming on, but he has some issues with his electricity, and then we have Will, who has some
Who just
issues
doesn't
with
want
his Wi-Fi. So we'll see. We'll see what happens. What happens with that?
He's on holiday at the moment, and I think even his Wi-Fi is on holiday as well.
Oh, he's on holiday. Well, he didn't say that. He said he.
If they go on holiday together, what kind of marriage is that?
Yeah, right.
He doesn't bring us along. What the hell? Yeah, he's touring France at the moment. How nice is that?
Well, I really need to get something to eat. Richard, you don't have access to, like, can you pull up screens and everything? You can't do that, right?
No, unfortunately, I cannot. I need to be babysat.
Okay, so what I'm gonna do is I will see if I can. I should have your screen here.
And then you can just pop it up, and then we can go from there.
Yeah, I will see what I can do here.
Because I'm assuming Dirk also needs to go, seeing as
Yeah, sadly, I under normal circumstances, I would have said now, of course, I'm more than happy to stay with you a little bit longer. But as a matter of fact, I have an appointment that starts in 8 minutes from now.
And you also have some
no worries, Dirk. I'm gonna grab some. I'm gonna grab something to eat, Richard, and then I will be back and keep you company if Samir is not. So apparently Samir is going to be here in about 5 minutes. So I'll set everything up here in the back end, and then you should be all ready.
Cool, thank you. It seems as though you guys trust me way too much, leaving the stream in my so delicate hands. Capable,
no, I'm going to be in the background. Don't worry.
All right, guys, everybody, take care and see you again latest next Monday. And have a good session, Richard.
Thank you, Dirk. Always a pleasure.
Share screen.
I think he's. How do I add that one? I'm so sick of this sometimes. This is just okay. Where is? There's your screen. Good stuff. Okay.
It keeps giving up saying share screen.
I'm just gonna change the name of your scene, and then I'm gonna be just duplicating that. Create one for Samir as well. It's gonna be a little bit back and forth here while I set that up.
While you're busy with that, I'll have a quick look at chat. I can't pull up the the comments, but I will just read them off just quickly. From one of them from some of them that I've just seen now. It's like Louis saying, "Hey Richard, how's it, Louis? I'm good, and you?" Pooley SA's most famous trader in the house. I doubt I'm the most famous trader in the house. I can almost tell you I'm not, but thanks for the vote of confidence there.
I think it's the most famous South African trader in the live stream, though.
In this live stream, most definitely. The only one as well, so by proxy. And then Ellis is saying he caught some nice EU buys. Payout now pending. Congratulations, Ellis. patience.
Richard, I'm gonna have to jump off. I will be in the background and just send me a message or whatever if you need any help. Okay, I'll be back soon.
Yeah, cool. Excellent. Thanks, man.
All right, take care.
Go enjoy your lunch.
Thank you.
Good day, everybody. How is everybody doing on this lovely Monday? Myself, I had a very good Monday morning so far. I had a stream this morning, and just before that stream, I ended up taking a little sell on gold that ended up being very, very profitable. So I am very thankful for that move. Ella saying busy period for me, 4 trades in a month. 4 trades in a month? Oh yeah, but you're more of a higher time frame, almost position trading. MGN, why hello there. Hello, brother. How are you? MGN is my literal brother, blood brother. Randy Lipko, Euro USD 1.8. So we're on 17.59. Thinking we can get to 1.8, which should be above this point over here. So where's 1.8? It's there. Yeah, we still have a ways to go. I mean, from here to current price is about 40 pips. It can happen, but I think the market requires impetus. It needs something to drive it to that point. So yeah, we'll see whether or not that can happen. Today, I don't know. Tomorrow, I don't know. We'll have to wait and see. Sigma FX, hello from Apex Brotherhood. Richard Butler taking the helm on the 5ers. Yeah, man. It's with me at the charge here. You know, me at the helm steering the ship. Good things ahead. Good things ahead. Omar Trader, love the stream. It's awesome to hear that you're enjoying the stream. If you do, hit that like button or the subscribe button if you haven't already. Gibran Ahmed says, need another $1,500 to pass my challenge. Dude, don't try and make that all in one move. Try and segment it, and then you'll definitely get there. Kamza G, hi Richard. Hello Kamza, how are you? AQ Packs, can you switch to NASDAQ? Myself, I don't really trade NASDAQ, but I can put the chart up for you on my my layout, let's say. So here's NAS 100. I do know that Samir is way more of the NASDAQ trader. So once Samir is here, then we can get some real in-depth information on the NASDAQ. That would be quite nice as well. Digital Factory saying GU Outlook. We'll get to the GU Outlook in a moment. And then, yeah, extremely well morning. 3 scalps, XAU and EU, all plus. Happy Monday, RC at Richard. That's awesome. I'm glad to know that you had a nice, profitable day as well. Tanjiro Kamado. Nice. I like the reference. What you advise for somebody who is new in trading for Forex? Any advice or roadmap? I'm also going to just keep this one on the side so I can get to that one as well. Yeah. And then Rashikesh. I don't know if I pronounced your name properly, but bro, I'm an Indian. You're already very nice, bro. Thank you very much. Like that. All right, cool. So let me just get to GU Outlook. GU Outlook at the moment, I marked we're bullish at the moment. Price is making higher highs. And when we do have... Whoa, Samir, how are you, my friend?
Hey, yo, what's up, man?
Oh, happy to see you.
Yeah, man. How are you doing today?
Oh, I am fantastic. And you?
I'm good. So yeah, let's go.
How's the markets been for you? Well, you haven't traded yet, but like, what's your anticipation?
Friday it was a loss for me. I took 2 losses. Thursday it was a win actually, 1 to 2. So like last week was a break-even week for me. Let's see what this week is gonna bring.
Oh, I'm looking forward to. Remember, you and I have a competition tomorrow, so
yeah, exactly. I'm excited about that.
Oh, it's going to be fun. I was just in the middle of looking at GU. There was somebody that wants us to look at NASDAQ. And obviously, you're the resident NASDAQ expert, so I thought we could leave for you. Anyway, you were
saying. I was saying actually, seems like you're gonna kick my ass tomorrow.
What makes you think that? No, I don't think.
I don't know. I'm seeing some listed about tools here. Seems like you're on a winning streak, man.
Well, you have winning streaks, and then you have like these long losing streaks, and then some winning. We'll see. It's
Yeah.
today's results is not a guarantee of tomorrow's results, but I did have a very, very good gold short this morning, and I marked another trade. I didn't take the second trade, but I did take the first one for a nice 1 to 1.5 R on gold. So
That's good. Let me just stick my hair a little bit.
yeah, you adjust that so you
Okay.
can get your. Love the glasses though.
Yeah, it's actually the specs. I got it colored, to go on the outside,
Oh, is
maybe.
Is it a prescription?
It is
Oh.
like one number here, 3 here.
Oh
So
wow!
it is not the
your left
It
eye
is
is the
the-
problem one.
Yeah, it is for the eyesight. I have a bad
mine-
eyesight actually. This
Yeah,
trading
I-
caused that.
Yeah, I have astigmatism, so my focal points are like. Okay, wait. My focal points are.
I got it. I forgot the term. Kind of partial amblyopia type of thing on my left
Oh.
eye.
I mean, so we're constantly in front of the screens. I mean, if our
Yeah.
eyes are off, it's because of this.
This week is really interesting. We have some interest rates coming, I believe, this week. I'm just checking the Forex Factory.
Yeah, we've got when we're trading tomorrow.
Let's
We've got retail sales.
filter it. Okay, I'm gonna apply some filters. Yeah, it's gonna be a big news actually. So yeah, I don't think so. We're gonna get a good move on, USD pairs. Maybe it's kind of 50-50 right now. But yeah, we definitely will trade if we get the opportunity. And anyway, you analysis, by the way. I interrupted you. I'm sorry.
No, that's all good, man. Like, I'm happy to have some too.
Yeah.
So with GU, generally after a either high impact news day, like on a Thursday as an example, or maybe even a Friday one, the Monday is generally like timid. It's a very consolidative, waiting for something to push the market in a direction. So it's building up its orders, and then it starts its move. And it's sometimes difficult to predict if it's going to go long or short. But today, for me, if I just start on the hourly. So for those who don't know, this green line is just a 20 EMA, exponential moving average. And then the colors in the background is just a sessions indicator. That's all I generally need to use in order to see what I want. And anyway, so from last week, we had the high point, which we tested now today, but we had a much higher point on Tuesday, which we've also pushed through most recently. But if I take this whole section and create a little box and say, okay, this is a area of interest. Actually, maybe we'll take the full one. So the last upward push before we had quite a downward drop. Mark that out, push it all the way through to the right. Now you have an area of interest. Price pushes back into this area, rejects off of it, but doesn't create a new low. If you had to compare the low that we had on the news on Thursday versus the low of Friday, there is quite a gap. So this is about 30 pip gap that on this morning when Tokyo opened up, we needed to at least, I think it was about 60 pips that we needed. Yeah, it was about 60 pips that we needed to move down before we come and take the liquidity, the orders that's sitting here underneath Thursday's low point, the swing, the high impact news swing. So for me, what was the area of least resistance was the potential for it to go higher, because the news event indicated the need for price to go to the higher point. So when we came in today, obviously Monday, for me generally is a lower probability trading day, because the weekend obviously has some news that takes place. There's some tweets that come out, or some X, or whatever you want to call those. I don't know. Is it just a post, X post? There's all of these talks and stuff like that, macro and micro economic factors that come into play. So when Monday comes around, we will only see the impact of that weekend information on the Monday after the London session usually has opened up. And also today is a Japanese bank holiday, so my expectancy was not to see Tokyo really give us the directional bias for the day. And anyway, so now this morning, because we had the lower probability of going down and a higher probability of going towards the upper side that go bullish, I wanted to see price indicate bullish momentum. So on the hourly, obviously, if I used the replay tool and I just get to this point over here, this is all we saw. We just saw that price was struggling to push higher, but it was making higher lows, but not really higher highs. So as price eventually came to the end of Tokyo, so if I go down to the 15-minute, we attempted this push lower. So Tokyo ended on the 8 o'clock UTC plus 2 time, and then it attempted to go lower, but it didn't even come remotely close to the Tokyo low, which is where I would have expected, if we wanted to go bearish, for it to at least attempt to test the Tokyo low. Either break through it, retrace back to Tokyo, and then continue down lower, but it didn't. Or just knock off of it and then shoot straight through it. But it didn't do either one of those two things. And then what it did is it started turning, and it made the London session candle open was very strong. Nice, strong, bullish candle on the 15-minute. And that's all I needed to know, or to believe, or let's say infer my bias that we want to go higher. So I'm looking for buys. Drop down to the 5-minute. This was that long 15-minute candle. We pushed nicely towards the upside. We retraced ever so slightly. We came close to the 20 EMA. We made a base and then a continuation higher. So for me, we are in a bullish uptrend. I want to see higher highs. I want to see the price push higher. To where we're going to go, I have no idea. There is so much that is above this point where we are now that needs to be taken. Like the point that we've reached was 136.13, and it's exactly in line with a high downward bearish momentum move. So if I just force this one to go all the way left, we are exactly in that price point at the moment. So it needs to break through this in order to carry on going higher. But what is above it? We had multiple, this is on the hourly, we had multiple downward facing candles. We had a trend going down. If I can get, there we go. We had a trend going down, the break of the trend, the touch of the trend, and then it tried to come and test it again. So to me, this is a high point of interest where we are currently. We can see a potential for it to just touch into it and then start moving lower, but I do honestly think that we're going to break higher on GU. Specifically with the fact that we don't really have that much dollar strength at the moment. And I believe that Dirk and Jonatan also spoke about it earlier. The dollar is not the most favorable currency for people to want to invest in at the moment. They're removing their investments from the dollar and they're placing it elsewhere, whether it's the CHF or it could be Bitcoin or gold. It seems as though there's a little bit of a withdrawal from gold, so not from gold, from dollar. So it makes sense to me that we might be pushing higher. So the trade that I marked, I took a sell this morning for a 1-to-1, which was perfect. was attempting to go higher on Tokyo, and then it pushed a little bit lower. I just took a 1-to-1, but my expectancy was still that we were going to go higher. And then this one that I marked over here was just due to the fact that when we had the opportunity to try and push lower, we've created a higher high at this point up here already. But when we had an opportunity to push lower to try and say change the direction of the trend, it failed. And it just started showing more volumetric upward movements, and marked it. Didn't take it because I've already had my 3 trades for today. So marked. Visually, I can see, yes, it wants to carry on moving higher, but myself following my plan, I'm no longer in the market. I am sitting this one out. Yeah, that's what I see. I'm seeing bullish momentum. Where to get in is going to depend on what kind of trader you are. Personally, with this range where we are in at the moment, I don't want to take any more buys specifically from this point. I would want it to retrace back, and to where it could retrace is really going to depend on whether or not we are going to get high impact news or high impact information during this week. So we have the rate cut or the rate information on Wednesday, which is probably going to be the big informer of where this price is going to go. So other than that, I'm bullish until further notice, let's say.
Yeah, makes sense.
So what do you see on NAS? Let's see.
Let's add
like
some
you're the
most
resident
popular
expert.
pair, and let's see what these pairs can do. I'm just adding a pair here. Can I switch to my screen? Remy, if you're there. I think I don't have DSS actually.
Yeah, nor do I. But I'm not sure whether or not Jonatan, he went to go and
Yeah.
have lunch, but I don't know if he's in the background.
I think Remy can do that. Let me send him a message.
No competition today, yes. There isn't anybody that is competing today. Tomorrow we have a double elimination, and then on Thursday
Yeah.
we have a double elimination as well. But it's just to give the people that were supposed to trade on Wednesday an opportunity to not be in the market when you have the rate cut or rate funds information coming out. And then I'm not entirely sure why we don't have a competition today. Maybe the people were just not available. It's possible.
Can you put on GJ, then put on NAS 100 for the viewers?
For me,
I just want them to notice the difference in the behavior of these two pairs.
You want GJ?
You can put GJ, you can put 4-hour time frame.
4-hour time frame for you. Let me.
Yeah. Just zoom out a bit. Yeah, you can do one by one. It's okay. Chat,
you
look
want
at this. Look at this price action.
Let's
And
do
now,
both. And then the
yeah,
other
you
one
can do
was
both.
GJ and what was
NAS
the other one?
100.
NAS
NAS 100.
Also on the 4-hourly.
Yeah.
How much do you want it zoomed out? You happy with
Yeah,
this
that's
amount?
okay. I just want them to see how clean NAS 100 impulses are if we compare it to GJ or maybe any exotic pair, I don't know. So my point is just stick with the most liquid or volume pair. Like Richard itself is trading Euro USD, gold, GBP USD as far I know. So I don't know if you trade GG or not, but I just want them to see if you stick with the most traded pair or the pair which is having good volume, I think you are gonna make better decisions in it. Like if we compare this GJ, wicking here and there, it's just my personal opinion, of course. I mean, you might be having some different strategies, working good on these pairs. I'm just sharing my point of view, if people want to know how I see the things. So this is what my point of view is. I am that kind of guy who would go where the price action is a little bit more cleaner. We have more decent impulses. So my point here is just see the most traded pair or the pair which is having volume and compare it with the kind of the pair which is kind of 50-50. So yeah,
I
you
agree with
should
that.
make the decision. Anyways, I'm not here to convince you to just do this. I'm just sharing my perspective. So yeah, you can do your own things, and you can take my things in consideration. Maybe you can
There's
see the
value.
charts here and there, and you can make your decision on your own, the things you like and all. And yeah,
Definitely value in saying that. Like, I think Jonatan also mentioned it earlier that, and along with Dirk as well, that the volume plays a massive role in a lot of people's trading styles, and the psychology of staying in a trade where there's low volume. You don't know, is it gonna go and hit my stop loss? Is it gonna hit my TP?
yeah, exactly.
Try and stay with or not saying
Yeah.
do that. Like you're it's not advising. It's almost like go and have a look at the higher volume,
Yeah,
volatility
exactly.
pairs, and then see what you can make from that. Yeah.
Yeah, I remember I was in a Aussie NZD trade a couple of months back. It really did anything for like 2-3 days. I just was paying swaps here and there. So yeah, I mean, the moment I shifted to these high volume pairs, and of course, it comes with a little bit of risk also, but you should be aware of how to manage these things well. Okay. And one thing is, I do want to talk about with you, Richard, is like people often like focus on the lot size. I am that kind of guy who see like 1% risk. I see it risk wise. A lot of these Indian traders are really focused on the lot sizes. I don't know if other communities, but I'm just targeting the Indian traders right now. And the traders, even my friends, they talk about to me, and they are really focused on which lot size should I take, what kind of things should I do, this is the lot size, this and that. But I'm like, just take 1% risk. What is the stop loss size? You just put that in a calculator, position size calculator, and just enter the lot size that tool is giving you. That is my belief. I want to know if you are a kind of lot size guy or kind of a more
So-
focused on risk guy,
So myself, I'm more of a mathematical kind of person. So I will take into consideration the lot size, but the lot size to me is just one factor of the larger equation. I generally look at percentage risk as my ultimate indicator. I want to see I'm risking, but I need to break it down to see that if I'm going to enter a trade on a specific entity, specific asset, am I going to risk too much or too little? So lot size is part of that calculation. But when I speak
exactly.
to people about risk, it's almost always in relation to percentage rather than lot size. Obviously,
Yeah.
you are, let's not say inexperienced, but let's say you are a younger or less experienced trader. Not inexperienced, just less experienced. You would try and look at the information that is the most prevalent to you. So when you go to MetaTrader as an example, you have volume, you have lot size. That's what you input. And
Exactly.
you can do the calculation to see, oh, okay, if I'm putting in one lot size, 1 pip is equal to this amount of dollar. And then you're going to work it out like that. But at some point, you're going to get to the point of saying, you know what, how much am I risking for this trade idea? So the more experience,
just, kind of stuck in your mind, like this, I need to do,
yes,
with more
like,
experience. But
yeah.
I'm sorry, you can complete.
No. You finished my sentence for me. So you understand exactly what I was referring to.
So I'm just going to give my friend as an example. He's 3 years in this trading thing. And I don't know, he's so stubborn to, realize this thing. Like the things that you mentioned, it should be in correlation with your risk parameters and all these things. So again, I would like to end this particular topic here with don't be that stubborn, realize the things faster and take action really quickly. Okay? And then you should, of course, do the right things. And yeah. I was thinking about this lot size thing, and then my friend's story came in my mind, so that's why I discussed with you. He's like 3 years in, still I don't know. Like he asked me what lot size you use and all these things, you know. I'm like, it doesn't even matter. What matter is the risk that I'm taking. I'm taking 1% risk. Okay, my lot size can be here and there, 0.25 here and there. It's okay.
But so long as you know that 0.25 lot, what percentage of risk it equates to, like even if you're somebody that just speaks that kind of way, you don't necessarily think in the idea of risk when you're talking to someone. Maybe you're trying to simplify it for yourself. So I know of people that when they see the dollar value, they need to do a calculation to figure out what is their risk. They can't do the equations in their mind. However, when you look at the lot size, they know exactly that if I put in 0.25 lots, it's going to be equal to $25 or $50 or whatever in risk. So if it's written down for them, they can see it, but it's just easier for them to just refer to it as lots, as an example.
Yeah.
So
you should always
doesn't mean it's wrong, but learn to get, or not, let's say learn to get used to referring to your risk as a percentage.
Exactly.
Yeah. I mean, you're trading with a prop firm, and they don't say you're not allowed to go X lot size. They say try and keep to X percentage risk or less than X percentage risk. So they're referring to risk in a percentage. Obviously, it would be prevalent for you to also start looking at your risk as a percentage rather than a lot size.
Exactly.
But yeah, that's the end of that topic. There was somebody who asked a question. I'm just looking back. I just want to go and see.
Okay. Trying to make the last 1% to pass my second 100K account from 5ers. Amazing. Movie recap 47. It's good. Like you are on last 1%. You should, risk accordingly. You should not risk, a lot. Kind of negative risk to reward traders. I don't believe in them, but don't try to be that. You risk 3%, 4%, try to get 1%. Don't do that. But now you're very close again. And yeah, it's good.
It was Tanjiro Komodo. He said, what you advise for somebody who is new in trading in Forex? Any advice or roadmap? So, Samir, what if you were a new trader and you came into this sphere? What advice would you give yourself from your experience?
First of all, I would really, focus on two things in the phase one of my journey. Of course, there will be different phases. First will be building the foundation in the right way and setting the right expectations when I'm stepping into this thing. These two things need to be done in a very careful manner. If you set your expectations in a way like I was doing back in 6 years ago, I thought making 10%, 20%, even 50% or doubling my account or flipping these things, these accounts are okay and we can do it. But my expectations was not really up to the point, and I was trying to find the holy grail to achieve this thing which never existed. I wasted my 4 years in this thing. If I would have built my foundation in the right way, what do I mean by that is, if I see the people who I admire, of course, not these, you should have the ability to differentiate what is right for you and what is wrong for you. Okay, so keeping that thing in mind, I would pick 1 or 2 good traders and just try to learn what they are doing and how they are seeing the charts. And of course, the same thing. Now my foundation is good. I know this is the technical part. This is the psychological part, and my expectations is good. I know, some months are losing month. Some months can be a small profit. Some months can be even a good, bigger profit. I know my expectations now. I am building my foundation in the right way. Now, I want some data. to back up these things. And to get that data, I need to step in the live market. And now I have learned the strategy here and there, few parts of that. Of course, it is important. Strategy is important, I know. But you should not focus that much on like, I need to know this also, this also, this also, like I did back in the days, wasted a lot of time. You should focus on a couple of things, like 3-4 things. Can be some, for an example, can be a liquidity point. Your strategy can be anything. I'm just giving you an example. Can be a support resistance, can be kind of a trend line, can be a EMA type of thing, anything which is resonating with you. Now you have these things back of your mind. You are clear about, your mindset is clear, your expectations are good. And now you need some data, you need some testing. I will give myself like 6 months in a live market, just showing up every day and these things. And then I think these are the couple of things that I mentioned. I think nobody can stop you from being profitable. You can just cut your journey in half, basically. If it would have taken you 5 years, it will take you 2 years, 1 year. If you take this kind of things that I mentioned seriously. So yeah, take things slow. Just realize what is good, what is bad. Don't get fascinated with the wrong things. Like I mentioned, doubling your account every month is possible. It is not actually. Maybe 1 month you can do it, and then your mind will think that, okay, I did it. Now I'm going to do it every month, every year, whatever you are thinking. Just set your expectations in a right way. I think it can burn a lot of time if you fail to do this. Like you will try to find that hidden piece which is never there, which don't exist basically. So I think this is the major point. And apart from it, collecting data is the most important part as well. So yeah, I didn't focus so much on the strategy part because I believe with 2-3 terms, with 2-3 technical parts, it is possible to get good results, get good gains. So yeah, take these things very seriously. It's a serious business. I know it is very easy to click a buy or sell, but you should do it in the right way, basically. Build your foundation in the right way. It can take time, it's okay, but it is gonna set you good for life, basically. You are not doing this for fun, you're not doing this for hobby, you are doing this professionally, so you should treat it professionally. I didn't treat it professionally for 4 years, I think 3-4 years. Burnt a lot of time, kind of mental stress here and there. I'm glad I didn't lost hairs. Maybe I was going to the gym and all. But yeah, I've seen a guy actually, he was senior, like 1 year ahead of me in school. I see him, he's also a trader, kind of a stock market trader. He lost his hairs. I'm so glad that I have it. Anyways, coming back to the point. And yeah, guys, really build your foundation in the right way. I'm telling you again and again. If you let yourself distract and you go on the wrong path, then you're going to burn a lot of time. Of course, you're going to realize after some time, but why not to just save your time? I'm just giving you the right steps here. So yeah, just follow these things.
So I love the fact that you mentioned expectation, because I feel as though expectation is something that people get over-involved in, let's rather say. Because you're focusing more on the expectation than the reality. Look, I like looking at it like this. Nothing is impossible, but the probability of it is highly unlikely. So can you double your account every month? Of course you can. It's not impossible. Is it probable? Meaning, what's the likelihood of it happening? It's probably not going to happen. So why are you focusing on the expectation that it's going to happen or it could happen? Because you've seen somebody doing it, or at least somebody has shown you a video or something of them doing it. The idea is that this industry is, like you say, it's a professional business effectively. You should look at it as if you are a professional. A doctor goes to university to go and study for 7, 8, 9, 10 years, and only after that point do they actually start practicing. They start their own practice and they start operating on people. Yes, obviously they start They do in South Africa specifically. You will go to university for 5 years, and your last 2 years up to 7 years is, so you go 7 years, and then the first 5 years is like theoretical, and then the last 2 years is you going and working at a hospital and actually getting practical experience. But the point being that a doctor studies for 7 years to be a professional in their field. You,
Exactly.
a trader, do you expect to rock up after, let's say, a few weeks of learning trading to be an
Yeah.
expert in the field? No. Understand that it's going to take you years, and treat it as if you are, for argument's sake, going to university, or treat it as if you are a business professional that is starting a business. Seriously. Put the effort in, but curb your expectations. Make sure that when you are looking at what is possible, don't let what is possible override what is probable.
Yeah. And if you really want to be a trader, if you really love this thing, sooner or later, you are going to do these things that we are mentioning. Maybe 5 years later, 8 years later, I don't know. Some guys take 10 years. I'm not saying you will take the same route, but I'm just saying you're going to realize this thing sooner or later. Why not to just do it now? Take action on the things that are being shared here, actually. Because all of these trainers are really giving good experience. They have been in the markets. They know what they're talking about. They have secured payouts. And yeah, you should take action just right away, immediately.
Yeah, Tanjiro now, he's asking about, he gets highly confused with lot and RRs. So these are foundational things, but it's a lot of people that talk about lot size versus RR. RR is risk to reward. It's a ratio. It's I'm offering up one of something as my risk, and my expectation, my reward is 2 or 3 times that amount. So it's just a factor.
Yeah.
It is 1/2, 1/3, 1/4 as an example. The lot size is just when you look at the value of one of those R's, it will be dependent on your lot size. So if I have one lot size, I know that one lot size of a contract is equal to $100,000 as an example. I know that if I'm trading one lot size, I will make $10 per pip, and my stop loss is 10 pips. So my risk is $100 because it's my lot size multiplied by the amount of pips that I have. So lot size I know is 1. I know the dollar value is 10. $10 times 10 pips equals $100. So my risk is 100. That is risk. The reward is going to be the factor of that. Am I putting up one risk to make 2 reward? So one risk in this case is $100. A 1 to 2 risk to reward, RR, would be $100 risk, $200 reward. So if you factor it, you write it down, it's 1:2, 1:3, 1:4. Or you can factor 1/2, 1/3. That is the difference between lot and risk to reward. The factor is what it is, but the lot size is a part of the calculation to see what is your risk to reward. You can't work out your risk to reward without your lot size. That's the idea. I don't know if that makes sense to you, Tanjiro, but they're not the same thing, but the one is part of the calculation to figure out what is the other one. So you need your lot size, you need your risk, the amount of pips, the amount of dollar value that you're risking, and then your reward would be my 1 to 2s, 1 to 4s, that kind of like thing.
I think on the stream I mentioned, if you watch me on the previous stream, Polka trades, I have breakdown DXY and all these pairs in a correlation with this DXY. I was bearish on DXY because we are printing kind of lower lows, lower highs on the weekly. So I do expect at least price tapping this area. I don't know, maybe it can make double bottom and then can go up, break. It's not really my concern right now. My concern was it is making kind of a lower high, so I can expect at least till this area. So until this area is tapped, I'm gonna be bullish on kind of XXX USD pairs. Can be Euro USD, GBP USD. Said the same thing over and over again. Live stream, just looking for buys on GU. It was here. It was a pullback opportunity. Now I think selling here, it is really a risky move right here. Don't be that kind of guy. I know it is easy to press buy and sell. It is very easy. And then you're gonna, take bad decisions. Why not to just think just for 1 second? What am I doing? Right now, selling is a wise option. I don't think so, because we don't really have any major resistance also. If it was around this area, then maybe, you could have taken a sell, because there's a very good resistance in my opinion. Even if it just liquidates here like little bit, still you can look for kind of a sell move. But until then, we don't really have any major selling area according to me, considering the DXY. So yeah, I will be looking for buys only on this pair. Maybe kind of a pullback buys now. Maybe this news can, make kind of a pullback and then can push to higher prices. Also at the same time, it can act as a liquidity also. But for that also, we need confirmation. What can be the confirmation? Maybe a structure shift on the hourly. Kind of this as a kind of a good swing low. And you can plan for a kind of pullback trades. So until then, I don't think so you should touch this. But if you are, scalping here and there, then there must be good opportunities on other pairs as well. I'm not really sure. Let's take a look.
So, I mean, when you are looking for sells, as an example, poker trades, you're saying, Samir, can you take a sell on GU and get some big wins? You must ask yourself why. Why would you want to sell GU? Like, what is the reasoning behind you wanting to sell? It's not as simple as saying, if I take a sell now, can I make big wins? You could, but what is the likelihood of it happening? And then what informs that decision? Why do you want to sell? That's the question. And then if you can figure out the why, if it doesn't make sense, then don't take the trade. If it makes sense to you why, then go ahead and do what you feel is necessary to be done.
Yeah. And I think someone asked if NAS 100, let me find the...
Yeah, it was a little bit higher up. There was somebody that asked for...
Do you think NAS 100 is going all-time high today?
Yes, Ahmed.
I don't really know, because my strategy is structured in this way. I want the daily high or daily low to go and want a structure shift. Then I just want to look for this kind of impulse move. Last week was a break-even week. Let me explain you the trades actually. Let me explain you the loss on Friday. For that, I will do the event breaks. Yeah. You was saying something?
No. I asked you if you said that you had a loss last week, and you said you were going to talk about the trade. So I was just asking.
I'm gonna explain.
Yeah.
I didn't did anything wrong actually, so it was just not my day. I consider it this way. Okay, so this was a kind of daily high for me, and this high was taken at a New York session. I don't trade New York session, so my high would have been here, my recent high. Okay, I want the NYSE to take this high. So going to the 1 minute straight up, because we know now what high we are dealing with. So this was my high at that point of time, and this high also was not gone in the NYSE. So we're gonna just shift it here. Okay, here the high was gone, but we was not having any FVG, so I didn't decide to take any trade. So I again shifted my high here. So here we have another high. So I was waiting for some kind of FVG to get filled. I think we got a trade somewhere on here. Yeah, this was FVG because none of the candle really closed below any FVG. So I took the trade here, and my stop loss was here. Actually, the 1-to-1 was it, but I was aiming for 1-to-2, which didn't really triggered, and I took a stop loss on this one. And I again gave another chance to this trade I think it was not the area where I shorted. Okay, maybe I took at this breakout. So yeah, this was again a losing trade for me. So these are the 2 losses that I took. Did I did anything wrong here? Am I kind of sad? Did I broke my plan? Not really. I did everything that I normally do like on a daily basis. So this was a losing trade for me. So let's just move on now and let's discuss about the Thursday's trade, this was the Wednesday's high, and we took this high out right after the NYSE. The time is mine, yes. Am I allowed to trade in this time window? Yes. This was a FVG, so price goes below. At the retest, I took the trade, and my stop loss was like, I think 18 points, and I secured 1 to 2 here. Did the same thing? Yes. Friday, did the same thing? Yes. The result was not in my favor. And yeah, it is what it is. I know this strategy gives me 50% of the 50% win rate. So yeah, I'm good with it. So kind of break even week for me. Wednesday, I didn't really took any trade. Was it any trade? I'm not really sure. This high was at no, there was no trade actually, because this is a way too big FVG. I don't really take this much, this kind of FVGs in my trades. And apart from it also, we never took any high. So yeah, not my trading strategy. So yeah, last week was a kind of break-even week for me. Let's see this week what I can do. On my hand, I don't really want to make any single mistake. Let the market do what it's want to do. It's want to just hit my stop loss, maybe 5 stop losses in a row. Let it do. But my part, I don't really want to make any mistake. I don't want to give market any chance where market can say, oh, you made a mistake, now it's your loss. It's okay. I cannot accept it. But if I'm following my plan and if market says, okay, today is not your day, I'm going to hit your stop loss, I can accept that. Okay. So that's how.
What is making a mistake in your eyes?
Mistake, for an example, if I didn't wait it for any higher low to be taken, I just took the trade at kind of FVG or any, like previously I was taking a kind of session highs and lows also. So that was not really giving me that much good win rate. So I did a back testing on FX replay. I did a 6-month back testing data. I think it gave me around 30% profit. So I was happy with it. I was taking 1 to 2 trades similarly that I explained here, and waiting for the daily highs and lows to be gone, and then taking the action and my time window should be NYSE only. So again, coming to your point, mistakes can be not trading in your time window, because I have taken the trade on London session, Asian sessions also. Yeah, there was a couple of wins here and there, but my win rate was also suffering. And yeah, that's why I can't really follow the same practice, because I'm not really gonna get the desired results that I think that I can achieve. So
making a mistake was following your process.
Yeah, exactly. Following my plan.
And
my plan is simple.
Is something that you've worked out, you've got back-tested results on it, you understand it, you know how it works. So
exactly.
It's not to say that you're going to... Yeah, it's not to say that you didn't follow your plan entirely. There was one aspect of your plan that you didn't follow, and in so you've made a mistake. So the result that you got now, even though it was a loss, it was a good loss.
Exactly.
Because you followed your process. Whereas if you didn't follow your process and you entered and you got a win, it would have been a bad win.
Exactly.
What is that bad win going to do in future? You're going to keep wanting to make those bad trades because you're seeing the result. You're seeing the result is, ooh, I'm winning some of these trades. That's why it's important for you to focus on being process orientated versus results orientated. Simple.
Yeah. And with this strategy, I know funded accounts, we have kind of 10 chances if I risk 1%. I am aware of it, and I am okay with this kind of approach, risking 1%, or you can say 10% of particular equity, whatever you want to say. So I have made a significant percentage on my account over 5 months actually. I haven't blown these accounts that I'm trading. It's live accounts. And I am really comfortable and confident following the same things that I'm doing. And I also get flashbacks like, what kind of, if I take a trade out of my time window, if a setup is there, what this thing is gonna do for me? I ask these questions like almost every day. I have a small account going on right now just to pass my time because I was having some hub credits in Fiverr. So I kind of bought the account. I was gonna press, as it is a very small account, my psychology is different nowadays. Now, as I've trained or whatever you wanna say it is not gonna affect me even if I blow the account. But my mind was, what this decision is gonna take me, where it is gonna take me basically. So I was gonna take the trade on gold actually in the morning. And then I did a self-talk. I was like, okay, yeah, setup is there. I know maybe it can win. Maybe there is a high chance. It was 50-50 actually. I'm just saying to you with an example basically. So I'm like, in the long term, what this decision is gonna do for me. I know it is a small account, even if it fails, it doesn't really matter. But what good it can do for me. So I asked these kind of questions. So I came up with, if I follow my plan, my confidence is gonna be more. In future, this little brick is gonna add in my foundation. So I took the right decision. I'm really proud of it. I didn't took any foolish decision. Yesterday actually, on Friday actually, I was gonna take a trade on gold, but I'm really proud at the decision that I took, and I followed my plan. I want the same for you guys also. You should also do the same thing. If it is not in your plan, don't take it. Do the self-talk. You should analyze it really quickly in just fucking 5 seconds. Be that kind of trader. I want you to be that kind of trader. And yeah, that would have been hindrance in my success. I consider it that way. If I would have taken the trade out of my plan, it can put me 6 months behind my journey, in the long journey. So I don't really want that nowadays. So yeah, I am really afraid to do this kind of behavior and trading behavior now. So I have to be really careful if I wanna, reach kind of new levels, more heights. Then I think the things that I was doing, taking trade out of my plan, my time window, whatever I was doing, it is not really gonna get me there. So I am aware of it. So I'm doing everything to avoid the things that I was doing. And yeah, I'm kind of
agree with you there. Where if you make a decision, or before you make a decision, let's rather say, ask yourself the question, is this decision that I'm about to make going to harm my process? Is it going to hinder me from reaching my goal?
Yeah.
Or is it going to help me reach my goal? And if the answer is I don't know, or the answer is it's not going to help me, then don't make that decision.
Exactly.
Decide to stay rather.
I'm really a big believer in making myself better in every way possible. I've shared this in the previous stream also. So I'm very selfish guy. I would do anything to just reach new heights. Can be psychologically, mindset wise, I don't know, can be physically, can be financially. Of course, I will not, do some criminal shit, whatever. But yeah, I am that kind of guy. I don't really want to do any single mistake in this trading thing. The thing that is in my control, I don't want to let that thing get out of control. So yeah, what is in my control? Following my plan, and in the day-to-day activities, going to the gym every day, just consistent with that also. And yeah, keeping myself healthy. These things are in my control. I don't want to get these things out of my control. I am a big believer in that. Of course, these 3 things, I'm not going to lie, I was kind of off track with the gym, with the trading thing also. As my withdrawal came, I was really, I was like, okay, now I don't need to, whatever. I was kind of off track, basically. I didn't really hit the gym that hard that I normally do. So I realized it today, and tomorrow, I'm not really going to make any mistake. So yeah, I wasted 3 days, man.
Look, just to clarify to everybody, mistakes are normal.
Yeah.
You're going to make mistakes. Everybody is going to make a mistake. The question is, are you going to learn from that mistake? Are you going to allow yourself to continue making that mistake? That's the important thing. It's normal. It is a normal thing to make a mistake.
Exactly.
It's not normal to continue making that mistake but expecting a different result. So there's the saying that says, is the definition of insanity doing the same thing over and over again but expecting different results. So in Samir's case, obviously don't want to talk for you, but in your case, you realized there was a problem, there was something that you could work on, and you worked. That's the thing. That is what sets you apart from somebody that makes a mistake and beats themselves up about the mistake, but continues making the mistake.
Yeah.
If you find that there's something in your trading style, if there's something in the way that you're living your life that you're unhappy about, look at a way for you to start changing how you're doing things. Because what people like to do is as people, we like to look at what is called an external locus of control. We tend to blame our misfortune on outside factors. Yes, it's this person's fault. That person didn't do this, I would not have done that. That kind of like thing. Where we should internalize it. Look at yourself and say, what did I do that may have led to this specific outcome? Take control of it. I'm not saying beat yourself up about it, but take the responsibility for that action and say, because I did not sleep well, I went to bed late last night. This morning when I woke up, I didn't sleep well. I made a decision in the market that cost me. Instead of saying, the market is sniping my entries and sniping my stop losses, say, what could I have done to make my decision-making process a little bit more simple, or what do I need to do to make better decisions? And say, okay, well, maybe I need to go to bed a little bit earlier, or maybe I need to go to the gym, maybe I need to be a bit more physically active, and then start looking at what it is that you can do instead of just blaming the unknown or blaming outside factors. But at the same time, also be kind to yourself and don't say you're an idiot because you did this thing. Just yeah. So I 100% agree with you, Samir. I agree that there comes a time in trading where it's about learning about trading, and then there's a time that completely takes over, and that is learning about yourself.
Exactly. I really like the point
quite simple
that you mentioned, like doing the same thing and expecting different results. Actually, sometimes in our journey, we get so blind, we don't even realize we are doing the same thing. And in a rage, in an egoistic behavior, in a greedy behavior, I don't know what kind of mood that you are in at that particular point of time. I know it is hard, and you can't even see, you can't even realize the wrong that you are doing. So I think if anybody is in that particular phase, just take a step back. It is okay, actually. We everybody goes through that phases. Basically, I was seeing myself. I was shifting strategies to strategies. I was so blind. I was, like you mentioned, like doing the same thing and expecting different results. I was basically that guy. So I just had a flashback when I was there. So yeah, I feel it. So yeah, take a break, guys. If anybody is in that particular phase, take a break. It's okay. We go through that. It's okay,
Yeah, learn to step back sometimes.
Yeah.
Don't try and force it. The market is going to be there tomorrow, whether or not you are trying to do anything from it. The market is going to operate with or without you. Trying to force things is only going to impact your psychology and your emotional state. The market is an emotionless thing. It's numbers on a screen. Yes, it is impacted by emotion. Yes, it is. It can impact your own emotion, but it itself is an emotionless thing. You wanting to control it with your emotions, because I'm feeling FOMO, I expect my trade to win. because it's going on without me. Because I am greedy, I expect it to move in a certain direction. The only thing or the only person that's going to be negatively impacted is you when your trade doesn't go in your direction, when you suddenly loss due to you entering on a FOMO trade. So you cannot cut out emotions. It is a natural part of life, emotions. It's what you do after that emotion has been felt. It's what you do after you've experienced a negative thing or even a positive thing. It's the idea that you need to try and regulate the impact of the emotion. It's normal to feel it. Once again, same thing if it's normal for you to make a decision, but ask the question, I am angry right now because I missed a trade, or I'm angry right now because I lost a trade. If I jump in right now again, is this going to help me or is it going to harm me in the long run? And if you don't know what the answer is, or the answer is no, meaning it's going to harm you, don't enter. And take control of that. Let that become an internal locus of control instead of an external one. The thing about trading is that we all strive for the simplicity. We want to make it as simple as possible because it's easier for you as a human being to make decisions when you have limited options. It's easier for you to say yes or no if those are your only two options. But if you have yes, maybe, I'm not sure, then it becomes there's too many options for you to choose from. So people strive to want to make things simple. But in order for something to become simple, you first need to understand that it's complicated. It's a complicated thing. And you need to learn the complications within trading until you can get to a point where you're comfortable enough or you know enough or experienced enough that when you do start seeing things, it becomes simple. Simplicity is let's call it a reward for putting in the hard work. Things become simple with time. It's not going to be simple from the get-go. So, curb expectation, always.
I was muted. Yeah. I was saying, it is actually so hard to not do anything in trading. The art of learning that, I think once you learn that, your trading is gonna get better. So yeah, in a rage and an egoistic mode, in that greedy mode, once you lost, you're in a losing streak, like shifting strategies to strategies, you're so blind, like I was. It is so hard to not do anything. Like you mentioned, you are seeing the trade moving in your favor, and you are like, oh, I'm gonna miss it. I know it is so hard to let it go and not do anything. But I think you should put some light in your head, like this is also a thing, this is also an art that I should focus on.
Yeah.
Okay.
100%. I agree with you. Sorry, I have a hair in my eye and it is causing me some discomfort.
You can kind of wash your eyes, maybe?
I do have some eye drops over there, but I'm not going to go and grab them. It's good now. A little bit irritated, but that's okay.
Yeah. So, I remember I was on screen like all day, man. Was you the same?
Well, yeah, for me, if I'm like in front of the screen a lot, especially if there's like a backlight, the light that like a ring light or something, my eyes get so dry so quickly because I'm sitting here with my eyes open. I don't blink enough. So I need to look at that a little bit more. So I wanted to ask you, you also stream outside of the 5ers, don't you, Samir?
I used to, like 2 years ago. I was testing, but a couple of streams I stopped. And yeah, I am used to this freedom actually. I can go back. I'm thinking about, every day I wake up, I thank God actually for everything that I have that is in my blood now. I do these things daily nowadays. So I'm used to this freedom, and like you mentioned, that streaming thing, I don't really see my life that way now. Back then I was like, okay, let's create content, let's get, followers and all, whatever. And but now I think the things that I have done, I know I'm not really, making millions or whatever, but still, this freedom that I have worked for it and I'm loving it. And I'm really thankful for it, actually. And yeah,
And that
and the
because
streaming part, I was not, I started that. Actually, there was also a story behind it. I bought this
right,
PC with my trading money. And of course, my previous PC was not that capable of streaming and all. And I was like, let's put this on test. So that's how I got started with that thing 2 years ago. And yeah, those was the moment. Time passes really quickly. I know these are small things actually for many of you guys. Even these are very small things. But for me,
massive.
it was really big back then. Now it is okay, I have it, whatever. I know it's a very small thing, even if I think about it. But I am happy, I was thinking about I was gonna have this,
That's the
Now I
importance.
have it, whatever. I'm grateful actually. I feel that.
That
And
freedom
yeah,
is
I'm
what
walking.
running for,
Yeah,
Samir.
exactly.
So
So yeah, we are.
key is that we all have a different journey. We all have
Exactly.
different needs. But
Mhm.
if you apply yourself and you really think about putting in the effort, the right kind of
Mhm.
effort, this kind of lifestyle can be very rewarding.
Exactly.
So in your case, you said it's a small thing to maybe somebody else, but to you it was a big thing, and it's
Yeah.
like that celebration of the big of the small things. It's what
Mhm.
keeps you going. It's entering a trade that follows your plan, and you followed it 100%, and it was a good trade, and you got the win. It's
Mhm.
that little win, that little bit of confidence that you're gaining, and it's the repetition of those things that eventually get to the point of like, wow, I've made big strides. Like
Exactly.
the journey of 1,000 miles starts with one step. Your journey is
Mhm.
starting now, and you're going to take many one little steps. You're also going to take a few steps backwards as well,
Exactly.
but it's okay.
It feels
It's
like
all
yesterday.
process. It's all part of it.
Yeah, I'm sure if you look back, you have mentioned about that medical journey also. I remember. If you think about it, you might be thinking it was yesterday. Now you are on a different phase of your life. But yeah, it's good.
Like
Life
your
is
goal and my
this
goal in
only.
trading is not the same, and your goal is personalized to you. Your specifically what you want to get out of the market. Myself,
Yeah,
I don't care about the lavish lifestyle. I don't care about having expensive cars and a massive expensive house. I honestly could not give 2 cents about that. I really couldn't care. What I want is I want to be able to take care of my family and my extended family,
exactly.
my wife, her family, my brother, my parents, that
Mhm.
kind of stuff. That's who I want to take care of. And in order for me to do that, I need to apply myself. I need to be strict in the way that I approach trading. Yes,
Yeah,
you're going to have bad days. It happens. I mean, a doctor is going to go to work and his day is going to be horrible. Is he now all of a sudden going to say, I hate being a doctor, and now just
yeah,
start scalping people whenever he gets onto the operating table? No, he just understands that it's part of the job. It's one of those things. You can't appreciate the good without the bad, and it's one of the
yeah,
reasons why
exactly.
I say get comfortable with being uncomfortable, because you're going to be uncomfortable in
Mhm.
this process. You're going to find things out about yourself that you didn't know while trading. I can't remember who it was that said that trading is the ultimate equalizer. It's one of those things where you're going to find out a lot about yourself, you're going to find out a lot about the market, and it's going to humble you. And if you enter into
Exactly.
trading with an ego, you're going to have your knees knocked out from under you. So come in with a yearning to learn, come in with a yearning to understand. Understand that you're not always going to win. There is no such thing as a 100% win rate. It is
Exactly.
highly, highly unlikely that will ever happen. I mean, we're living in an age where AI and automation is so prevalent that even AI and automation doesn't get it 100% right. How can you think that you as a human being can do that same thing? And then you look on the internet and there's so many videos of people 100% win rate, and it's just like, it's not probable. It's just not probable. It's not going to happen just from somebody that shows a thing to you and says, just follow this plan and you're going to get 100% success. When there's people that have been in the industry for 10, 20, 30 years that maybe don't even have a 60% win rate, as an example. Just like throwing numbers out there. Always understand, curb your expectation, be willing to be a learner in the industry, and like be a leech, you know, like latch onto it as if you want to be the best pupil, the best learner in the class. Like hang on for dear life. Like if someone tries to remove you from that setting, say, no, I am focused on this, on this that I'm doing right now. I'm trying to become a better trader. Like Stanislas is asking, how many years should an average trader take to become profitable? Honestly, it doesn't matter. It doesn't matter how long it takes you to become profitable. The thing that matters is that you put in the time and the effort, and it's worth your time and effort to become profitable. If it takes you 6 years to become profitable, congratulations, you're profitable. The getting to that point, I don't think you should compare yourself with anybody else, in the sense that maybe Samir took 2 years to become profitable. Now all of a sudden, I need to compare myself with Samir. If I don't do it in 2 years, I'm a horrible trader. No, like we all learn at different paces, and I think that on average, people take multiple years to become profitable. I just don't think that it is a metric that really matters. But I understand, you want to understand how long. Let's say in your case, maybe you've been learning trading for the last 2 years and you're maybe not yet profitable, and you're starting to lose hope, or you're starting to think that you're never going to become profitable. Just understand that your journey is different from the people around you, and there might be something that you need to learn before you get to that point of now I'm profitable. Some people, I have a friend that picked up trading like this. They were so quick to pick up on it, and they were super profitable very early on. They couldn't maintain that profitability. They found something out.
Yeah.
They exploited it to its max, and then it just didn't work anymore. But they didn't adapt. And then there's other people that take 10 years to become profitable, but they're profitable for another 10 years after that as well. So your journey is personal to you. Don't compare yourself to other people. Yes, the information is there, the data is there. On average, it takes, let's say, for argument's sake, 2 to 5 years for someone to become profitable, or 3 years. You don't have to go and compare yourself with that metric at all. That's just my 2 cents. Like, I understand that the information is there. I just don't care about it, because it's not necessarily a reflection of me. It could be a reflection of somebody that wasn't as committed to it, as an example, or it could be a reflection of somebody that's all they were doing. So, like Louis Shepard is saying, I've been profitable and they're not profitable, but I can live with that as I'm constantly learning. And that is a gem. That is like a diamond in the rough gem. Profitability comes and goes, but the consistency is the learning. If you have a willingness to learn, then you will learn. So, yeah, I love that. And Andrea is also saying, is up to the trader, but consistent and profitable in less than 2 years, I don't think is possible. So, like I said earlier, possibility versus probability. Is it impossible? No. Is it probable? Probably not as well. So, yeah.
All right, Richard. I have to go now. I'll leave chat in your hands.
Oh,
So yeah.
thank you. I
All
wonder
right.
if
It was really nice. Yep.
thank you. And then I will definitely see you tomorrow, because you
Tomorrow,
and I
yeah.
have some unsettled
Definitely.
business that we need to attend
Exactly.
to. So
Let's see.
let
Let's
the
hope for the
best man
best. And
win.
yeah. Yeah. It was
Thanks,
really
Samir.
nice
You have a
talking to
lovely
you,
day.
Richard. And thank you, Chad. And yeah, take care. I'll see you tomorrow, 5:30 p.m. Indian Standard Time. And yeah, take care, everyone. Bye,
Cheers,
Richard.
Samir.
Okay.
All right, guys, that was Samir. Thank you very much to him for keeping me company for this last hour-ish, almost an hour. I am very thankful to at least have somebody to talk to. But now I get to talk to chat. Let's see. Rahul says, just like in any field, some people learn fast and some learn slow. It's up to the individual. 100% agree to that. Andrea or Stanislas says, great, I've been trading for 6 months, but I was starting to doubt myself. So self-doubt is a horrible thing to go through. And all you need is 1 or 2 days of consistency for you to start gaining confidence in yourself again. 6 months is a short time frame. Ask yourself the question, what am I expecting, or what did I expect to achieve in that 6 months? I don't know your backstory. I don't know if you are a full-time trader. I'm assuming after 6 months, probably not. But look at the career maybe that you were in before you decided to start looking at trading as a means to help yourself financially. How long did it take you in that career before you reached a point where you said, I really understand what it is that I'm doing? I'm not talking about how long did it take you to, make money, because, working a job, you get paid from the first day that you start working there. But what I'm referring to is like, how long did it take you to learn your craft? How long did it take you to feel like, wow, I feel like I'm more knowledgeable now than I was X amount of days ago, X amount of years, X amount of months, that kind of like thing. And then you can go and compare that to trading. And then you say, in my work life, it took me 4 years after studying for something and then going and working, it took me 2 years. So it's 6 years. And yet you're starting to doubt yourself after 6 months. How did you get yourself to not doubt your abilities when you were working? I don't know if the way that I am stating the question is making much sense, but the point just being that self-doubt is remedied by consistently working the process. The results that you have is most probably what's causing your doubt, because you're looking at the market in the sense that if I lose, it's bad. If I win, it's good. And I'm losing more often than I'm winning, ergo, I'm doubting my capability. So that is a natural thing, but it's difficult for you to try and counteract that feeling. And the feeling, the emotional side, the psychological side of trading, in my personal opinion, is the most difficult aspect of trading. You can learn statistics, you can learn data, you can learn about the market, you can learn about fundamentals, and you can always go and find that information yet again. The information will be there, you can have it printed, or you can have it locked up somewhere and you can just go and have a look at it. But the psychological and emotional side of trading is a constant battle every single day. It's not like you're going to pitch up today and you're going to have an aha moment and then everything is sorted. No, you're going to have millions and millions of aha moments where you figure something out about yourself, but then the real work starts. The inflection is the first part. It's, what am I going to do with this information that I have now? If you realize that I'm somebody that overtrades, what am I going to do? Like, I'm somebody that overtrades. What do I need to put into place? And that's where the real work starts. And that's why I believe that The psychology of trading is the most difficult thing because it's a constant daily battle. But it is something that is worth it. It's worth it if you start looking at the process rather than the results. So instead of saying, I lost a trade today, I'm bad. I'm a bad trader. I'm losing confidence in my ability. I'm starting to doubt my ability as a trader. Instead of looking at the result as the means of saying, let me doubt myself, look at you following your actual process. Let's say you have a mechanical system with mechanical rules that states that you're only allowed to enter on a retest of a support zone. That's the only time you're allowed to enter. And if today there was a support zone and you saw an entry and you entered, give yourself a pat on the back and say, you know what? I followed my process. The result doesn't matter. Was it a winning trade? Was it a losing trade? It doesn't matter. I followed my process. Document the fact that you followed your process. And the next time you get to that same support area where you're going to take your trade, as an example, remember back to that first time that you did it. And then you will realize, okay, I felt good because I followed my process. You're not looking at the P&L. You're not looking at your losses or your account size. You're just purely focusing on the process and following the process. Then what will eventually happen is you can have multiple losses in a row and it will not bother you. Or at least it's going to bother you a lot less. And the mental impact of it on you will be less. The psychological impact will be less. So, yeah, just a long-winded way of saying that your focus, what you focus on, your focal point, is the thing that is going to cause you to feel insignificant, or it's going to make you feel doubt, or it's going to make you feel like you can't do this. But if you just focus on the process and try and build good processes and good habits, the eventuality will be that you will win and you will become consistent, and those losses will have less of an impact on you. Because obviously we're all emotional beings, you know. It's one of those things where things are going to happen and you're not always going to have control over it, but it's understanding what it is that you have control over it and taking control over it. Like, here's a question from Krishna asking, what strategy works best in market? So, my belief, and you guys are more than welcome to disagree with me. I don't believe that there's a single strategy that works best in the market. I do believe that any strategy has the potential to be profitable. In my mind, it's not the strategy that is the profitable thing. It is how the strategy is implemented that is profitable, or the person itself that's in control of that strategy, if you keep to the strategy. I think Jonatan mentioned it earlier. He's busy looking at creating a EA or a strategy revolved around the idea of, was it the higher time frame? I think it was on the hourly, and then moving average crossovers. This is something that has been done before, and it has shown profitability, and then the profitability disappeared, and then it came back and disappeared. The point being that strategy is something that he's looking at, and it's a strategy that could work. So any strategy has the potential to work. I don't believe that there's a single one strategy that is the best for every market. We do have strategies that show more profitability in certain seasons, or during certain seasons, and during certain markets. For an example, there's a lot of factors. Like, let's look at Bitcoin. Bitcoin is a highly volatile asset. And if you are a scalper by heart and you're trying to scalp Bitcoin as an example, yes, it could work, but some of the factors that you need to take into consideration is slippage. You need to take into consideration the spreads, which broker that you're working with, what's the delay, what is the ping between the time that you enter your trade and it reaching the ECN. There's a lot of factors that's going to play a role in whether or not you have a profitable system, yes or no. And it's not always up to you and your ability. So in that case, maybe scalping is not the best idea for that specific market, that specific asset, and where you're staying. Maybe your internet is a little bit slower than normal and you're not getting the response times between you clicking the trade to enter and it actually entering on the ECN. Or like I said with the spread, let's say the market that, or the broker that you're trading with has high spread amounts. A scalping strategy is not necessarily going to work that well. However, on a broker that has lower spreads or a broker that has faster execution times, maybe scalping works a little bit better. Maybe on a market that is a little bit less volatile than, for argument's sake, Bitcoin as an example, would be better for scalping. So that one strategy that works on Euro USD is not necessarily going to work on Bitcoin. And that's why I say there isn't one strategy that works best for the market, because it's nuanced. There's so many different factors that you need to take into consideration.
Jonatan.
How are you, Jonatan?
I'm good. How are you?
Not too shabby. There's a question here from Oroko Alexander that asks, what's the probability of doing well in a demo and blowing account and real-time capital?
I don't get that.
So he's asking, what is the probability of you doing well when you've been trading on a demo versus real-time, real money trading? Does it correlate?
Well, I guess it's difficult to answer, the specific probability of that. I mean, it's a lot of variables that go into that. Most likely, it's going to have a lot to do with you as a person, you as a trader. But I do think trading psychology plays a whole different role when it comes to live trading, because you start to getting, most likely you start getting fearful of losing. You don't want to lose money. Basically, you don't want to lose money. You don't want to go in a drawdown. If you get funded, for example, you want to make sure that you actually keep that funded account in profit. You want to be able to get those payouts, and the deeper into drawdown you get, it's going to take a longer time for you to get that payout. So I think fear plays a huge role once you go live. So I would say being profitable in demo means that you have a profitable system, but it doesn't mean you're a profitable trader. Not at all. I think that's such a big difference between. I've developed several profitable trading strategies, but I'm not trading them. I'm not trading all of them. I'm mostly focused on algorithmic trading and swing trading, because active trading for me is just, it's not working because of, I don't have the mental discipline to be able to function in that state of mind that you need to be consistently to be able to perform as an active trader. It's very difficult.
I think you mentioned it before that you consider yourself to be an excellent analyst, but not necessarily the greatest trader. And I think it's important for people to realize that there is a distinction between the two. You can be amazing analyst, but not necessarily somebody that actually follows their own plan, as an example.
Yeah, I mean, I have people following my analysis making money, but I'm on a.
You yourself, you're not. It's just like, what's going on? Why am I not making my system?
I have a lot of students that are way more successful than me in trading, and I have people following my analysis and making money. And sometimes I'm going to get messages like, "Oh, thank you for that idea. That was a great idea." I'm like, okay, good for you. I lost
Congratulations. Why am I not you?
Yeah, you can send me some, No, but I think it's definitely it's such a huge difference between analysis and live trading, and developing a profitable system and actually trading that system profitably is two different things. I think it requires, to be a good analyst, you need to be able to see patterns and kind of understand what all the tools are and things like that. But to be a good trader, you need to be calm. You need to be disciplined. You need to have the patience necessary to wait for the right setups. You don't have to wait for anything when you're just doing analysis or demo trading. Like, you don't really have to wait. You can just always do something. I mean, when you're analyzing the market, you're always doing something, you're always looking for something, there's always something happening. But then when you're supposed to be trading, you have to just wait. You have to wait for that analysis to play out. And for a lot of people, I think it's difficult to wait when you have the potential to make unlimited amount of money, and then you're just doing nothing, which is very counterintuitive, you know?
It's the productivity. You're expecting yourself to be participating permanently because the opportunity is there. It's the fact that you have so many opportunities that you're almost like wanting for naught. Like, there's so much opportunity for you to make money, and you feel guilty if you're not participating permanently.
Yeah, pretty much. It's almost like you feel like there's opportunities going to waste when you're not taking action. And I think that's one of the biggest problem in trading, that need to be in a position, and I guess it's what it comes down to is the need to make money. You know, if you're too dependent on your trading income, that's going to be problematic. But also, it's also about, you know, the need to trade, I think, is very problematic.
Randy over here, Lipko, has made a comment, and this to me is the most ironic comment of the day. Made the wrong decision today, taking your advice on shorting EU.
Made the wrong decision today. Oh, okay, this is a great one, actually. Okay, let me let me break this down. So let's go to, let me actually break this is a wonderful comment, and let me go to Euro USD. Okay, so what my idea for shorting Euro USD is based, and this is something I explained also why explaining this idea. My idea to short Euro USD is to first look at a break, a break of this current accumulation range that we're seeing, on a possible accumulation range that we're seeing on the dollar cost average. Now, remember, this analysis here is based on a 15-year channel, 15 years, and we have about 100 days, I believe, left in this accumulation zone. So the fact that you were able to lose money today on this idea, an idea that I'm potentially waiting 2 or 3 months to get confirmed, I would not even begin looking at a short on Euro USD until we break below this level, and maybe not even until we break below this level. And if we break out here, the idea is invalidated, and I'm then going to be looking for shorts up here. So I don't think you made the wrong decision. You made the absolute right decision, because now you have a situation where you're like, maybe I should rethink the whole idea of trading based on someone else's ideas, you know?
That's what I was referring to, the irony.
Yeah.
The irony of the comment. It's like, I made the wrong decision based on your advice. It's like,
yeah. That makes me not, I mean, I've been in this industry for long enough not to really get frustrated over comments like that, but it does really prove that even though you have people coming into a live stream like this one, we're really trying to share valuable advice, and every single live stream we tell people that you shouldn't be taking our trades, you shouldn't be following our trades, you should take what we say and then try to implement it into your own strategy. Even with that, you're still always going to have traders coming in and just straight up copying what we're doing and then losing money, and then doing everything they can not to realize that their own fault. It's their own fault to try to blame the market or try to blame another person's analysis. And I think that's why it's so easy to follow other people in the market, because it's very easy to take a trade when you're not the one taking the trade, really, because you're just following someone else. So if that idea,
you're not the one analyzing it,
yeah. So if that idea fails, it's not your fault. It's
I'm not to blame.
The other person, which means like you're kind of you're switching the blame to someone else,
shifting the blame onto someone else, and you yourself are blameless now. It's not my fault that it was X person that put it on Twitter, he said I should do it.
Yeah,
You're never
exactly.
going to learn if you're constantly blaming other people for the decisions that you take.
And I would also want to ask that person, like, if I also told you to buy Bitcoin at 20K. The question is,
Did you?
You didn't. Most people did not buy Bitcoin when I told them to buy Bitcoin at 20K, because then they're fearful and you're in the bear market. So it's like, yeah,
Yeah, you can never satisfy everybody, but that's the thing. That's why it's always prefaced that this is not financial advice. This is a bunch of experienced people sharing their experience with you so that you can build upon your own experience. It's not to say
Right.
that they're always right. It's not to say that they have the golden egg to trading and that this is the right way to do it. It's just that this is how they did it. But once again, it's a long process. It's something that takes years. And if you're rocking up to a live stream, anybody's live stream, with the expectation that this person is going to give you trades, it's not a signal group. I mean, don't copy the trades. I don't know how many times it needs to be prefaced. Don't copy the trades. You don't always understand why Jonatan specifically entered that trade. You can see the understanding, maybe. You can see the like visually why you wanted to enter, but you don't always understand why. The actual reason behind the entry for the trade, and that comes with experience.
Yeah, I mean, if you're seeing someone take a trade and you agree with it based on your own analysis, then I actually think that type of confidence is great when you have that traders conference where two people, maybe even two people with two different systems, are seeing the same trade. That's good confidence, because that means that it's most likely get a lot of other market participants seeing the same trade, and then it kind of turns into a self-fulfilling prophecy. If everyone sees a buy signal on gold, then gold is going to go up, because people are going to be buying gold. So I guess that's one way, one time where you want to probably look at following other signals. But if you don't have a system, I mean, most people begin trading like that. They don't have a system. It's too complicated to create a system. They don't have the time to create a system. They want to make money now. They want to get rich now, and so they go into live stream and they simply copy what others do, and then they realize that if this works, then everyone would be doing it, and then they start developing a system. I think the quicker you start developing your system, the better.
Yeah, but I also feel like the strategy is the last thing that you look at during your training or during your trading cycle. Learning about trading comes first. Learning about the psychology comes second. And then eventually, once you have a decent understanding of those, and then you start looking at, I have an idea, and then formulating the idea, and then testing the idea, and then seeing, okay, now I have this, and then comes implementation. So implementation of a strategy to me is the last thing when it comes to trading.
Yeah, absolutely. You need to first understand. So if you're building a system on technical analysis, obviously you first need to understand technical analysis before you can build a system based on it. So definitely that makes a lot of sense.
All right, Jonatan, I think that is the end of my section.
Yeah.
I will see you tomorrow for my competition with Samir. So that's right. Be interesting.
You have the account and everything. It's all set up.
It's ready to go.
Nice. That's gonna be amazing. Have you seen this? I don't know. Did you see this one?
I saw it this morning, and I'm just there's something that I'm not seeing, and not right now. It's my name there at the bottom. I'm not seeing that just yet, but that comes with time.
Yeah, we'll have to. We'll see about that tomorrow.
Yeah. Well, only time will tell.
Yeah, it's gonna be real fun. Looking forward to that.
All right, Jonatan, thank you once again for having me on. Everybody in chat, have a lovely day, and enjoy the rest of the day, guys. We'll see you tomorrow. Bye-bye.
Thank you. Take care. Right, guys. Okay. What are we watching today? I want to show you guys something. We have a few interesting movements in the market. I'm going to go through every market. Yes, I'm going to go through every market here. I'm going to talk about what I'm seeing right now. So we got CAD CHF. Actually, you know what? I'm not going to say every single pair I'm watching because that's just weird. We're just going to see if we can find anything interesting. So first of all, I want to take you back to 1965. No, I want to take you back to not that long ago, like summer of 2025. Feels like ages ago, but it's only a couple of months ago. Man, it's depressing. So, do I have the folders here? Okay, maybe it's this one. What's with all the moving averages? Let's get rid of them. So I'm not sure if you guys are familiar with if you remember the analysis that we did in May this year, where we talked about seeing USD JPY move up to the range EQ, and basically the whole idea. Now this is a possible short if we were to break down, but as you guys can see, we had from, I believe that was at the start of the analysis when we had the retest of the 0.618, we moved up the range EQ. Now we're talking about a 689 pip move to the upside. Now remember, when we looked at this analysis, I remember I had LJ on the stream when talking about this. We had Anastasia on as well, and they're all saying like, well, you know, why would you want to long US here? Why would you want to long the US dollar here? The US dollar is going to go down. You know, we have price target of USD JPY being way lower than what it is right now. And I said, yeah, fundamentally, USD JPY does not look like a beautiful long setup, but technically, it looks like the only long setup I would ever want to take. Turned out that the fundamental analysts were wrong once again, and price prevailed. And that's why I always say that everything we need is in price. You can get all your fancy subscription to Bloomberg and whatever, and you can do research hours and hours and hours and come up with this beautiful idea of you wanting the price of whatever move up and down. Or you can just take all of that and then take a box of matches and then use it, light it on fire. That's what you can do. And then you can just look at price instead, because everything that will happen in the fundamentals of thing and in the macroeconomics will be visible in price. If the fundamentals say that USD JPY should move lower, should be bearish, but price does something else, you're better off just following price for as long as you can. Following that trend is one of the most powerful things in investing and trading you can do. And therefore, I believe, for me, price action and technical analysis is the priority for me. Okay, so I just want to show you guys that, because a lot of people are... Actually, I haven't seen anyone agreeing with me on the idea, which also, you know, if you have an idea that makes sense to you, but no one's agreeing with you, you know, because of fundamental reasons, and some people also say that for technical reasons, the dollar should go lower. And they're probably right, okay? They're probably right. And they have very good reasons to believe that there's going to be prolonged USD weakness. And they're probably right. But I don't see it. That's the thing. Through my lens, the way I view the markets, I don't see that. I see a possible bottoming of the dollar. Of course, I see potential of going lower. But I would be betting on dollar strength, like in the next coming months or so, which leads me to believe that I want to be looking for positions based on a changing theme and a changing structure of the dollar. Just keep that in mind. When we looked at a long on USD JPY, no one was really agreeing with that either. But then we had a 700 pip move to the upside based on that analysis. We're now looking at USD CAD, and we're looking at a 300 to 350, maybe even 400 pip move to the upside from this level. 400 pip move to the upside takes us right below 1.43. Do I think price will go up to that level? I don't know, but do I think it's more likely to move higher than lower? Yes, I do think in the next few weeks or months, I think USD CAD will be trading higher than what it currently is right now. I might be wrong, and that's just what trading is all about. We take risks, and by taking that risk, we know that we might lose money. That's why we have stop losses and invalidation levels. So that's what I'm looking at right now on USD CAD. I also want to bring your attention to GBP JPY. We had a massive breakout today. I think we are creating yearly highs on GBP JPY. This is a very strong breakout right here. Henry says, what does Henry say? Henry says, I think there is a case for long on the dollar currency index if the interest rates remain unchanged. They're not going to remain unchanged though. Like, if the interest rates remain unchanged, that would just be, that's just going to be insane, right? But I don't really care. I think there's going to be, like, I'm not going to try to act as type of fundamental analyst, right? So I'm not going to try to try to act like I know price is going to move this and that if interest rate goes up and down. What I do see though is a potential bottoming structure on the dollar. We'll see what happens. Alexander is rooting for LJ. Me too. I mean, I kind of do. I like LJ. It's going to be very interesting to see the matchup between LJ and Will. I think this could be next week. Tomorrow we had 2 matches, I believe. Let me see if I can share the screen with you guys. Yep, we got... these are the matchups for tomorrow. We have on Tuesday, 10:30. We got Derry versus Jeremy. James unfortunately had to cancel his appearance. We're gonna be having Derry and Jeremy in the first hour of the live stream tomorrow, and then later in the midday session or afternoon this time, we're gonna have Samir versus Richard, and then on Thursday we're gonna have Anastasia versus Pedro and Carla versus Jordan. So that's gonna be really exciting. And wow, we have Rich versus myself. I forgot about that one. That kind of like I felt like a stone. Someone just threw a big ass stone in my stomach when I read Rich. It's gonna be me against Rich, and the winner of that one goes up against LJ and Will. Okay, so I think in the semifinals, my prediction for this match, for this semifinals, it's going to be I mean, I have to say me. I have to say it's gonna be me and Will, right? But like, if we're gonna be honest, probably me and LJ. Anyway, let's go back to TradingView. Right, so we got that massive breakout on GBP JPY. We also have a daily break and retest on GBP NCD. And that's right, you can go into the comment section and you have a link where you can get live updates on the trading tournament. See all the dates for the confirmed matchups and who's winning. Right, so if we look at GBP NCD here, we can see that we're obviously hitting a level here that is historically very strong resistance. We broke above it once in this summer, but then last time this happened was summer of 2015. So it's definitely an area that has acted as strong resistance in the past and a level where price doesn't really stay above for very long. And we don't really have a lot of instances where we can base our statistics on, if you will. But we can say that there's definitely some type of retest happening right here. So on the weekly, I like that level. So I'm going to add a little text here. Right, weekly level. Then if we go into daily, you can see that the daily price came down and sort of hit the midpoint of whatever area this is. We can add like a big support zone right here and see that price came down into the mid zone of that one. I'm going to remove the trend line here. I don't think that's valid. Right, so this looks like a really good bounce. And then if we go into the 4 hour, I'm actually on the wrong layout here. So if we go back to this one, we can get the correct one. Right, so this is the idea. If we go into the 4 hour, what we see here is a asymmetrical head and shoulders, or a head and shoulders with a sloping or a descending neckline. So inverse head and shoulders with a descending neckline. And if we assume that we're going to get a potential retest, so we'll look at this as a break and retest. That would be a good retest. And then if we take the measured rule, I can make it once again. So the way you look for a profit target on a head and shoulders is you look at the top of the head. In this case, this is an inverse head and shoulders. So you look at the bottom of the pattern up to the neckline. The question is the neckline here? Is the neckline here? I would argue that probably around this area. So 97 pips. Where's the entry going to be here? Probably around this level. You then take that and then you double it to the upside, which means profit target is going to be around this area. So we're talking about a 1.66 R trade. And that profit target area aligns with that resistance above. So I'm liking that. I'm liking this as a long setup on GBP NZD. Let me know in the comments, guys. Let me know if you have any questions, anything you want me to look at today. Let me know and I will take a look for you. So I'm removing Euro GBP here from this list. I'm not really too interested in that one. So the entry on the GBP CHF, we entered GBP CHF in the early hour of the stream. We're slowly but surely making our way back into the entry area right here, but I still like the idea. 4 hour is going to close in 28 minutes. I'm really liking what I'm seeing here as well. I'm going to bring you over to my, I'm going to show the algo portfolio that I have as well. I'm going to show you the setup I have entered on that one. So as you can see, I'm currently long on Euro JPY. I'm long on GBP JPY and USD CAD. Now it's pretty cool that I'm long on USD CAD on the EA. And this is actually a completely new EA for USD CAD. So I'm gonna have to open a new market here for that. Let me just change a couple of things here. Where do we have USD CAD? Right, so this is USD CAD. I gotta just take a look here, see what time frame this is based on to make sure. Actually, you know what? It doesn't really matter. But we can look at the daily. Right, so this EA has a wow. Just give me a second here. So it looks like this EA has entered a 1-to-1 risk-reward ratio on USD CAD. About the same interest I have on my swing trade, actually. All right, so that's interesting. Okay, so let's use the CAD. I can't remember exactly what this EA is based on, so I gotta look that up. But we also have a long on GBP JPY. As you can see here, it has already taken a few longs on GBP JPY, where we had at least one winning trade, one losing trade, one winning trade here, and then a break even, and we have another trade right here. So all in all, it's a decent EA. This one, as you can see, it's taken quite a lot of trades here in this trend. It's been mostly profitable, but pretty much around break even. I'm currently running 2 EAs on GBP JPY. You can see that it has just activated one of the buys. It has another buy order up here as well. Of course, this is a breakout trading, a breakout EA, as you can see. One of the EAs has a take profit target set, another one has an open one. So that's, and then we're gonna look at Euro JPY as well, and it has entered a buy here as well. All right, let's get back to trading view. This is something I wanted to share with you guys in the earlier today in my session with Dirk. So AU density is about to break out, and if you look at the weekly, I believe it's the weekly. Yeah, it's currently trading at an area where we have not seen AUD NCD trading above this area since 2022. It's an obvious resistance area, but if we go down and look at the daily, these are the most recent tests of this resistance area, and here we can see a clear double bottom, a swing point, a clear I wonder what, so it's not a V-shaped recovery, obviously, because it's resistance. I wonder what the opposite of V-shaped recovery is. Anyway, what we see here is that we see clear rejection of this level right here. And what we're seeing this time around is actually a clear rejection, and then we get price taking out the highs of this rejection right here. So we're seeing a completely different structure right here. So this actually looks very strong. Looks like this has potential for a real breakout. I want to look at the divergences as well. And I want to compare what price is doing. So let's take a look at the first test of that level. So I think the divergence here is fairly obvious. You have, looks like an equal high area, and but you have lower highs on the indicators, which tells us that's possible divergence. This can't really be a divergence because it's just one high. Here you also have a type of divergence with higher highs and higher lows on the indicators. Now, what are we seeing right now? Yeah, could potentially turn into a bearish divergences as well. But it's definitely an indicator to keep your eyes on. If not, I mean, not an indicator. It's a breakout to keep your eyes on. And if it's not if it turns into a fake out, then we have a potential mean reversion type of trade here. Right, so that's AD/NCD. Possible breakout trade. It could be a mean reversion trade as well. Man, guys, I'm so tired today. Starting my intermediate fasting today. Gonna drink a lot of water. Got my alerts, setting an alert here on USD CAD. If it breaks out this level again, that would confirm possible setup. How's the GBP CHF trade going? Got a question on gold. Let's take a look at gold. Gold has been repeatedly rejecting the 45 to 46 resistance zone. Should it break through now? Let's take a look. Let's add a resistance here. So we'll do 45 to 46. I think you also have to ask yourself about this trend line. Because it's testing that trend line as well. So if you think resistance will break with more touches, then you might look at this this support and say the same about that support. So that's important to remember. Now, it does have a lot of tests, and yes, the more touches a resistance has, the weaker it becomes, but then stronger once it flips. I think we can go into the lower time frames here. We see that the moves here on the range very clear, very clean. Yes, Sam. I mean intermittent. What does intermittent mean? I like the sound of intermediate fasting. I'm doing intermediate fasting. Yes, and yes, it's a new diet. It's a new diet. I'm now officially doing intermediate fasting. I think that's a much better word. So that's what I'm doing. Right. Okay. So looking at the 1 minute right here, you can actually see that look at the RSI here. And actually we're going to be adding volume, and then we'll be adding RSI to this. So what I'm trying to figure out is, what is the pattern? What is the pattern of volume, OBV, and the RSI on all the previous tests of this resistance? And we can see here that we have an uptrend in price. And from the same peak here, we have a downtrend in RSI. So that's a bearish divergence between price and RSI. I guess this is not really a divergence. Even though, I mean, you could argue that there's like a tiny, there is a higher high here. And then from that high to that high, there's actually bearish divergence, but it's tiny. But I mean, it's definitely not a bullish divergence. And then you see that you have higher highs right here. And then you can look at price, and it's clear that you have a bearish divergence here. And here the bearish divergence is very clear. You have lower highs and you have higher highs. So I think the divergences here on the RSI is very clear. Every single time you've hit this level, you start to see a bearish divergence on RSI. And we're getting something similar right now, where we're getting a slight lower top or lower high on the RSI with higher highs on price. So we are right now seeing the potential of a bearish divergence between price and the RSI. Now, what happens every time we hit this level on OBV? There is also a divergence on OBV. You can see this high on OBV, on that high, and then you have the next one as being lower. That is not a bearish divergence. What about this one? You have an uptrend. This is also not a bearish divergence. And here it's not very clear, but you have an uptrend and then you have no breakout on OBV. So we can see actually, you know what, guys? Let's try to code an indicator based on this. So what we want to see here is we want to create an indicator where it signals, actually we don't have to do that, but it would definitely be interesting. So it adds like an arrow on the screen here when OBV gets above the moving average here, and you can see that the moving average here is light. Okay, so we got the breakout here on gold right now. There we go. That's the breakout right there. So you can see a clear difference here between the RSI and price. You also have volume. On that test, volume was declining, volume declining here, volume flat, volume is flat here, but here you're actually having a rising volume right here with volume spike. RSI is getting higher. We have a possible breakout on OBV. So I think this is definitely a real breakout here on the 1 minute. So where's the target of this breakout? Let's zoom out. I don't see any clear target. Like if I just zoom out a little bit to the hourly, it all becomes very messy. So I can't really see a clear target on this. What I would do in this case is let's just imagine we buy right here. We place our stops right here, and let's just say we pick a high target like this one right here, and then what we do on the 1 minute, we add my little indicator here. We add the RL slingshot, RL slingshot, and we're basically just gonna follow price up. With the 50 EMA on the 1 minute. So right now we got the 50 EMA right here. That's the gray one. So that's probably what I would do. Just move that TP up with the 20 EMA. Do you see this as well? This was actually not a bearish divergence, because look at that high. Because I didn't zoom in, I didn't see. So this is actually not a bearish divergence, which you see higher highs in price, and you also saw higher highs in RSI. Now this is very interesting because this is not a bearish divergence, but every single time in the past we've had a bearish divergence when hitting that level. So by looking at the RSI and seeing that this time around there's no bearish divergence and price is approaching that level, might actually be a sign that that structure is breaking. And now it looks like this is clearly a real breakout. And this is also something worth noting. You have a strong breakout on OBV right here. And the breakout on OBV was confirmed right here. So the breakout on the OBV was actually confirmed before price broke out. Then you have a clear increase in volume here as well. So price has now found the local top, might be coming down for that retest. Remember, stop loss has been moved up with the 50 EMA. Man, look at all these long signals on gold. Only long signals, there's like no short signal at all. All right, price coming down closer to entry. Let's see what we get here. Yeah, we got Dirk here saying get over the misentry on gold. Yeah, it's tough one to deal with. Let's get a nice little 1 minute bullish engulfing here, or outside bar, or whatever you want to call it. We're gonna have Victor coming in, joining us shortly here. Make sure that you hit that like and subscribe. Just checking out the news here. That's right. I did miss the entry on gold. Okay, so we got U.S. Trade Representative Greer saying we are open to considering further actions on tariffs pause if talks are positive. All right, so that just that comment, we're probably going to see Euro USD higher. When did that happen? 14, so that's 10 minutes ago. Okay, good breakout here on low time frame breakout on Euro USD, hitting that resistance. So what I would want to see here is see if we can get a breakout on OBV as well. We're probably going to get that if we break that high low. Sorry guys, just got a few messages I've got to take care of. So GBP CHF, at least on the lower, no, GBP NCD on the lower time frames looks like it's creating, maybe front running that level, but we'll see. What about GBP CHF? Looks great. On the lower time frames, this looks absolutely amazing. We have the 4-hour closing in 1 minute and about 20 seconds, and I think that is a wonderful close. That looks like a really, really good close. Also in profit on the USD CAD long. All right, good stuff. Let's see how this goes. Look at that. Euro NCD is also showing us a... Okay, this is interesting. Is this exactly the same as GBP NCD? Yeah, pretty much. You even have the 4-hour inverted head and shoulders. Look at GBP NCD and then Euro NCD. You get the same type of structure. Interesting. All right, guys, let me know if there's any specific pairs, specific charts you want me to take a look at. What about S&P 500? Yes. Elvin says there's a fair value gap formed on 4-minute gold, which means possibility gold climbing up higher. No, it doesn't. It does not. I'm sorry, but it does not. 5-minute fair value gap. No, a fair value gap does not mean that there's... I mean, there's always a possibility of, but the fair value gap, I don't believe is... the fair value gap does not create a bigger possibility of gold moving higher. The fact that it's trading above resistance, that adds to the idea that price is going to move higher. S&P 500. Fortune is asking about the S&P 500. Let's take a look at the S&P 500. All right. Wait, is all-time high? All-time high again? Is this all-time high? What is going on? This is insane. Are we seeing... Yeah, I think that's what we're seeing. We're seeing all-time highs on the S&P 500 again. We've been seeing a lot of all-time highs on the S&P 500. I want to look at the future charts as well. Welcome. Open the door. Should have a sound where we open the door as well.
We should. How is everyone doing? Thank you for opening the door, Jonatan. I was gonna say, did you think it was pizza?
Oh, that would be nice. That would be nice.
What's your favorite pizza flavor?
Oh, I don't know, man. I don't eat a lot of pizza. My favorite pizza? I don't like. No, not really. Not really. Man, it was a long time ago since I ordered pizza. Maybe a year ago or something.
Really?
Yeah.
I love pizzas.
Yeah,
I know it's if you're trying to avoid carbohydrates, then pizza is not your friend. But pizza are great.
Yeah, they are. I love it. Definitely.
Okay, so we got go ahead.
S&P 500 and NASDAQ is breaking into new all-time highs today. So that's quite exciting to see. Again, just kind of getting used to this.
It's same old story, right? With S&P, it's a matter of time, and you will see all-time highs on the headlines every so often. And when they come, they keep on coming. That you get desensitized for them, right? You get accustomed to them, and you think it's always going to go up. And long term, yes, but not every year.
No, not every year.
I like the music, Jonatan. You have created a very chill vibe here.
Thank you. Thank you. I think I'm chill vibe is probably from just being tired. Yasir says, "What's your approach for such pair when they're at all-time highs?" Well, I'm yeah. So there's two ways to look at it. When it's breaking into new all-time highs, you are either late or I would say most of the time you're late when you're looking for an entry in all-time highs, but there's also opportunities to buy the breakout. Like I think most breakouts on the S&P 500 when we get into new all-time highs could be a good buy. A lot of the breakouts on S&P 500, I believe, recently has been very good breakouts when they break into new all-time highs. One way one way you can look at one way you could trade it or one way to trade in price discovery is to use Fibonacci retracement or Fibonacci extensions as potential targets, or just time moves. You can say how far does a breakout extend historically on the S&P 500, things like that. Well, I'm happy that you're here, Victor, because I got a meeting to attend. So unfortunately, I have to jump off and leave you. Check this out. Have you seen this?
Wow, it looks very impressive.
Yeah.
I think I was gonna say have you engraved my name in it already, but of course I've already been eliminated from the first round. I can't believe that I actually had a dip on my mood the rest of the day. To be fair,
Yeah,
I could not believe that I fumbled the ball that grossly. I was it got the better side of me, or I couldn't handle the. It's not about the pressure. It's just man, I still think about it and I think, what did I do? How could I be so foolish to make those all these mistakes that I did? I'm gonna come back. I'm gonna come back, and all of you who are still in that tournament, I'm gonna beat you all.
Yeah, we're definitely gonna do another round, another tournament. So you're welcome to join. Definitely.
Yeah, actually, I will make it a mission. I'll make my mission to come back and not make those mistakes and show some. I wanted the excitement, the matches every week or every so often, whatever it was, the frequency would be. Not gonna happen. Not gonna happen. I can't believe it.
Yeah. No. You'll get another chance. All right, Victor and everyone, thank you for joining me here. Victor is here to take over, and I will see you all tomorrow. Tomorrow we have two matches. We got one match with Samir versus Richard, and then we have another match between. You know what? I can't remember, but we got two matches tomorrow, and it's going to be exciting. And I hope to see you all there. I will see you, Victor, tomorrow as well. Take care.
No problem, Jonatan. Thank you for everything you have done today for the community. And yes, we will I'll be, anxiously waiting for your return tomorrow to the stream, Jonatan. Have a great day.
You too. Bye.
Bye-bye. All right. So this is the situation. And by situation, I mean EU looking great. I talked about this. We discussed this some time ago. I didn't expect it to happen this quickly. And what I'm talking about is the following. I'm going to go straight to it. Marina is... I couldn't believe it, Marina. I know that emoji was meant... pushed in or typed, send, posted when I was talking about how quickly I lost in the tournament. Too bad. I can't believe it. I'm still in disbelief how that turned out. But these things happen, and it's just to give an idea, I take losses on a regular basis, and I walk away from them, like most of the time, like just another trade. But the loss on the tournament, is still with me. So you just have an idea how impactful it was to me. Anyways, let's. Mufasa is asking what my idea on gold is. Sure, we will take a look at gold, but first let's look at the king in the forex market, which is euro dollar, right? Has the most volume. Well, gold is perhaps more popular, but still euro dollar is in terms of volume is the giant, right? So if we take a look at that. No, I'm not revengeful. I would say I'm very competitive, and if I lose in a match, I want to come back stronger, bigger, and better as soon as possible. That's what it is. It's not. But I do want a rematch. Revenge, like playful revenge on the tournament. Yes, I really. I can't be on the floor on the boxing ring. I can't stay on the floor. I gotta come up and fight back. That's the fighting spirit, right? The as a trader, right? We take losses, you have to come back. There is no other way. So we'll see. I'll have to wait. I don't know how often we will be doing these tournaments. I hope we do them very often, but maybe it will take I don't know, a couple of months before we have the next one. But as soon as that is I will come back. I will have my revenge in this life or the next one. That's a quote from a good movie. All right, let's take a look on the monthly time frame, right? Just to give you some idea, this is what I'm looking for on EU. We have in the last couple of 7 years or so, we have been within this range. There is, however, we all of that range that we've been into is part of a downtrend, right, on the monthly time frame. So just to give you guys a little perspective on the long-term price action. So in this range, we do have a possible reversal pattern, which is created by the top of that range, which is the established uptrend, the break of that neckline. It goes all the way after creating the first right shoulder into a possible second right shoulder, right? And that second right shoulder has its own entry order blocks, meaning places where price could come in and push back lower, either for a complete reversal or just a drop into lower levels before it continues higher. So we are currently on this time frame, we're currently interacting, not right now, but we have 2 months ago interacted with this first order block. It didn't see much. Price did react to it very nicely, but it doesn't convince us to, at least on price action as it is right now, it doesn't convince us that it's going to move much lower necessarily, at least according to what we're seeing right here. And why do I say that? Because if we go looking deeper, zoom in on the monthly time frame, right, the first time we reversed from that structure, we did not negate the initiating, right, the big green candle, which needs to be negated. It needs to be engulfed or somehow seen to have the control needs to be taken, and that didn't happen. Basically, even though this the next candle was very, very large, it's still, in comparison to the first one, meaning very neatly in terms of period in time, it's still less. So it should be considered a retrace and not a reversal, right? So that's just one thing. So we are coming back likely, at least on the monthly time frame, that we're looking for a second retest of this structure, right? That's on the higher time frames. However, on the weekly, right, on the weekly time frame, we are currently in a bearish fresh order block, which is looking very, very weak. But if it does react, then there's all reasons for us to expect, a much deeper, much lower reaction to it, right? It is in there, and so far price action has been very, very weak. And we created another order block here on the weekly time frame, and so far it has not been invalidated. So we have enough reason. We have enough reason to say, okay, maybe there is another drop coming up. Doesn't look like it now. It's looking very bullish. Order flow is to the bullish side. Everything looks like it wants to keep on going north, but we still haven't cleared these zones yet. So until it closes above this structure and eventually close above the one, the bigger one, we should have that scenario as a possible, as a possibility, right? So with that spirit, I would want to go to the look for possible areas that we could have that reversal. If it is going to play out, it's going to be built from the lower time frame, right? There's no other way. So you will see it on the H4, the daily, etc. So, and if we do go back to look for that quasi, what we find is that there is a smaller quasi on the daily time frame, and we're interacting here with the daily right here. Already, that's the entry, right, for that possible move down to that structure below, or that level. And we already had, right, so we already had, let's see here, already had a reaction that could be indicative of sellers taking control, right? And they did it right in the order block, the entry order block on the quasi. So price is already, even though it's not visible on the monthly, the weekly, on this time frame, it tells us that it is reacting to a place that could, coincide or could indicate that there could be a reversal coming up on EU. Even though it's very bullish, I know, I see it. It's likely to just continue higher, but that possibility is still here, right? So we're talking about this order block on the quasi, which the reaction created another order block. So this is the area that I'm looking for possible reversal. If it is going to come from the quasi to the left, the one that I just painted, with this being the head of that quasi, then this is the order block. It's quite wide. We're talking about, 76 pips right here. But that's the area, right? So let's go to the H4 to see if we find within this area, right? Within this area, a reason to sell. Okay? Yes, I am. All right, so within that area, this is the same area that I talked about on the daily. That's the area. We can find a H4 right there, right? Established uptrend, breaking of that neckline, and then it comes back. There's only one structure, and that is right now, right? So this is the only structure that, if price is going to reverse, that's the only visible structure on this time frame to be deemed as high probability. Okay, if I don't know if it's going to reverse, might just continue, but if it is going to reverse, then that is a good bet as a possible area. So, and what has happened today, and that's why I started talking about this, that region or that area has been reached today, right? So that means that we have already, let me mark this as what it is, which is an entry order block on the H4, and we also have an H2, which I didn't show, but it tells us that, it tells us the same thing. The quasi is also visible on the H2, and that gives me enough reasons to look for this area. There we go. You can see how we tapped into that area. So now we have the weekly, the daily, and the H4 aligned, right? So I'm going to be looking also the H2. And if I go to the 5 minute, we can start looking for a possible reversal. This is a trade I took earlier today, but we can look for a possible reversal here. I know it doesn't seem, like this does not seem bearish at all. However, that's how they start. You don't see them until it's already formed, but by then you should already be in it. It sounds like a catch 2022 kind of a thing, but it is possible to catch them right here. You see that? This is the quasi. So I'm looking for the possible reversal from this area, right? And the idea is to look for the quasis on the 5 minute, right, after it reaches this area. Okay, so we're going to be looking for that in the coming minutes. We still have about 40 minutes, and maybe it will come, maybe it will not. Maybe it will break the quasi, meaning not reverse and break the head and fail. That's okay. That happens, right? It's nothing to be frustrated. It's just something, it happens all the time. So nothing wrong about that, right? So you have the established uptrend, and we have the neckline, and let's mark that as what it is, which is a H5. I mean, not H5. 5 minute entry neckline. I mean, this being the current left shoulder, right? That's the left shoulder. This is the head, and that's the neckline, right? So it breaks it, and in this case, there is no entry order block on the 5. So to me, there isn't a reason or a place that I would want to trade at. That could mean a couple of things. It could mean that it's going to continue to go higher, right? Or it could mean that it's going to reverse, or it's already happening. The reversal, meaning it is going to continue this reversal, may or may not come as a retrace and then continue. Just it does not give you, an entry. It does not give you a structure, an order block for you to trade from, right? You could use fair value gaps as well. I didn't measure the effectiveness of those when I trade. I looked at them very briefly. I focused on order blocks. But you could look that up as well and trade, the fair value gaps as they come back, right, for the reversal. All right, so that is one area with no entry. Let's see on the 3 minute. The 3 minute does give us an area here. Same thing, right? So this is a 3 minute entry order block, and you can go to the 2. The 2 does have it as well, and the 1 equally, right? And let me mark that, all of them, so you guys have a right. So based on each one of them, I'm going to be trading just like that, right? So that's the 2 minute and the 1 minute as well, right? There, as you can see, the lower you go with the time frames, the more tight the entries become. And the tighter the better, because you can get wild risk reward ratios. Actually today was a very good example. The trade that I took, the order block was very, very tight. Look at that here, right? And that's the area. That's exactly the area. And I love it when the order blocks are so tight, because I can, it's very clear when it comes back and reacts to them, and they can be very, very profitable indeed, right? So let's move back to here. All right, so if only, all right, so yeah, so we did have the reaction, and it's reacting very beautifully from the entry order block on the higher time frame, on the hourlies. But I don't enter on the hourlies. You could, but I don't. I wait for price to actually come back and give me those tight, very tight entries, so I can. The entries are not tight. It's the order block, meaning they're very slim, and then the stop loss can be very tight, right? Very close by, and giving you that possibility of a much higher risk reward ratio. Let's check the chat. All right. Life of travel. Yes. Yes. Well, the thing is, the higher time frames, like the hourlies, are, even though they're slow, right? These structures, when they get retested or they get formed, it takes a lot of time. They can certainly dictate the direction during that day, right? The same way as these daily structures on the daily time frame, they dictate the direction of during a week, okay? And sometimes even more than that. Let's go to the week, for example. This is the weekly structure, right? So you have a bearish order block here, and however, if you look within a, maybe that's not a great, or actually let's take a look at it, right? So when you look, for example, this order block, right, this daily order block, the reaction you will get from it does not come within one day, right? It takes a couple of days for price to come back to it and perhaps mount a reversal. A couple of days means that, you know, it could be something that happens during this week or next week, likely. So as you can see, these structures on one time frame, they decide the rest of the week, or maybe even the 2 weeks afterwards, the following 2 weeks. And in the same token, when you have, if this were to be, let's say, an H4, right? And actually we do have, let's say this structure right here, right? Very beautiful, right? You have an H4 here. Let me mark it. Look at this H4, right? So you have an H4 here, and the fact that that H4 order block is there tells me that, you know, price, there is a good chance that price could, it doesn't happen all the time, right? That's the bearish candle, the price action that created the engulfing. It goes actually much higher and then comes back to that order block. Look at that order block. It comes back before continuing, right? So understanding what's happened on the higher time frame, in this case the H1 and 4, tells me where price is likely to have such a reaction. Meaning, look at the reaction that we had on this order block as it was retested right here. Let me mark it. Right, we had an H4 order block that was here, right? This order block was created from Friday, obviously, but it was instrumental in that push higher. So if you can know this, whatever gives you that indication beforehand of a possible move is something that is very useful for the following couple of bars, meaning the rest of that day. Meaning the H4 will give us not all the time, but a lot of the time will tell you, not 100% certain, but tells you, what is likely going to happen, right? If you see this order block right here, right, and without any other information, you could expect price to come back and move away from it. And that's, in this case, exactly, it happens all the time, or a lot of the times. And in this case, it was very, very beautiful, the reaction. So knowing that is very useful for your day trades, right? Because you basically know one scenario and where it might be activated, right? The move up. So if price gets to this area, there is the possibility of, not before, but right there, of buyers coming in great numbers. And they did. So I think it's super important knowing what is likely, having these scenarios that are likely to affect the rest of the day. Even if you're a day trader, for a scalper, the higher, the lower the time frame you go, the less important these are. However, I would argue, you want to have everything that is relevant for you for this day, and that H4 order block, which being fresh, price moving, that possibility of happening is super relevant for what's going to happen that day, even for a scalper. So I would argue that you should be looking for these H4 structures as well. To have that idea, you said it correctly, have that bias, or having that direction, what direction you want to be trading based on the H4 and the H1, and then you get in on a smaller time frame. In my experience, it depends on the rest of your system, but in my experience, I thought the 15-minute, even though it gives you great signals, it doesn't give you those tight entries as a 5-minute would. So I wouldn't using the 15-minute, but hey, it's not wrong. Just you have to perhaps adjust your system to accommodate the 15-minute, because in the way that I was using it, the 15-minute would get in too late, right? The price would have moved way too fast already. I don't know if I haven't checked it here. It depends on your trigger as well, right? So this would be the 15-minute. Price comes back into that order block, and you can see how quickly it reverses in the other direction, very, very quickly, and pushes like a rocket away from that area. This is the area that I'm talking about. Let me mark that. This is the area that I would be waiting for price to come back. And if it comes back within a certain number of bars, then I would be interested in getting in. And that's exactly what happened right here. Price came in, moves away very, very quickly. Let's look on the 5-minute to see if we have anything. Nothing yet. Maybe we can even put not on the 5, but on the 3, put a alert there. And there we go. We have the alert. So maybe if it comes back, we will then wait for price, and maybe we can take a trade together here with you guys. Don't forget to like and subscribe if you want to support our channel and are enjoying these moments with us. All right. I'm not sure I have that option. Ubi Rajara. I don't think I have that option. At least I know I don't have that option right here, but I'm not sure it's even possible in the background. What you can do is, once the live stream is ended, if I'm not mistaken, the subtitles will be in other languages as well. So not live, but afterwards, right? So that is something you could try and see if it works. Let me know if it doesn't work, so I don't say it anymore. But I thought that after the stream is over, you could get translated subtitles, and that could be helpful for everyone who would like other languages as well. All right, so that's on the trade. Remember, when I mark these areas, and the one that I marked, worked very beautifully, right? This one worked very, very beautiful, but it doesn't work like that all the time. Sometimes it works like that. Other times, it goes much deeper. So the way that I handle that is that I keep my risk very, very small, or relatively very small. And because I want to, sometimes price comes back. Let's say on this 3-minute, sometimes price comes back, and it looks very interesting. It does something that could indicate a reversal there, and it does move a little bit on its way, but then just continue higher, and I take a loss, and I'm fine with that, right? Then it creates another structure. I didn't do it quite well, and there I take it again, and I'm able to, because I take a lower risk per trade relative to my available risk capital. These losses are not huge, right? So I take them easily, and it might take one or sometimes two, sometimes even three structures before you can actually get in. And the only thing that the trade-off is, yes, I do lose more, but if you're trying to be very precise with the entry with a very tight stop loss, there isn't really a lot you can do, right? It's either this is the very moment, the very place, very exact place is going to reverse, or you're going to be wrong, and it's not going to reverse, at least not there, and that's fine. So if you're looking at this and you think, well, I'm gonna try this out, first of all, don't try anything. Test it, make your own judgment, build your own system. This is just for as an example. But even if this doesn't work out, the way that I trade is I take many of these structures, quasis, as long as it satisfies the structure, the rule, the set of rules. This is one, but it could make another one, and even afterwards go on and breaking the whole structure. And that's all built in, that's all baked in the trade plan. I'm okay with that. So just make sure you know what you're doing. Okay, so that's okay. All right, I will check this out. I will check it out. Thank you for your feedback. Actually, let me make a note here to ask that, because there isn't an option that I can choose. It's not that I choose not to have subtitles. So I will ask, on the background, someone who might know more about this, if there is something that I need to be doing. As far as I know, there isn't. But hey, maybe there is. Maybe there is something I could do to make sure that YouTube creates those subtitles in your language. Thank you for watching, by the way. I really appreciate it. From Rio de Janeiro. Thank you. Obrigado. Bom dia. All right. All right. So let's take a look at gold. I think someone asked for gold not so long ago. Let's take a look at gold. We have later on, in about 1 hour and a few minutes, we will be having another wonderful session in our Discord community, where we will be talking about your trades. You can join us and talk about your trades and get some feedback from other members, from myself, perhaps even some tips, whatever it is that you're facing, whatever struggle, or you want to celebrate it and be part of our community. While doing so, join our Discord community. It's highly recommended for anyone and everyone. Let's take a look at gold. Higher time frames is uber bullish as always. Gold is just one straight line going up. Nothing here for me to trade when prices like this. Not in this time frame. It already reached our target, the target that we set in a couple of weeks ago. I think it was in June, probably in June, that I talked about this target. Reached it and still going strong. To me, there isn't any trade here. It's already reached. Whenever I see on one time frame a market reaching a target, for me, it's a moment to reset, to let go of that trade, look for something else, either in this pair, another time frame, or just let go and you look for another opportunity, right? So typically opportunities don't come, it's not like a stream of opportunity in the same time frame, right? So just to be aware of that. So on the daily time frame, let's see what we have. Obviously, we had that compression and price broke out of it. We still have a bearish monthly and a weekly, but that monthly is at all not being relevant. Look at that. That's a bearish structure that is, at all not relevant, isn't doing anything here. So we do have on the daily. So let's look at the daily what we have. The weekly isn't anything. We had a very beautiful, look at this. We were just talking about these order blocks, right? I know I say order block a lot, but look at that. What do we see there? That's a very beautiful that's a daily order block, right? The order block was created here, right? And you can extend it to the left a couple of bars, and you'll see a lot of time price coming back in that order block, and without closing below that, going the other way, right? If you know that in advance, you have got one thing out of your way. You know the likely direction. You still have to get your entry and your reasons, maybe on the lower time frame, but just knowing this in advance is a huge, huge advantage, right? And it happened again. Look at that here. Yeah, the wider order block being created. What does it do? It does it again. Goes in, moves out. All the time. Well, not all the time, but very, very often. All right, so we do have two bullish order blocks on top of each other. A lot of bullishness coming to the market. That's my read on that. And if we go to the H4, let's see if we have something. We don't have a quasi. That's the neckline on the H4 as well. Let's mark that as such. Okay, let's mark that. And then what we have here is a no reversal pattern. There is actually a bullish quasi, which is just this. Actually, let me double check something here. Yes, okay, so we do have a quasi here, and it's already activated. That would be the left shoulder, and it doesn't look like this is going to continue to come back. But if it did, these would be nice entries, long, that is. It seems like something that is already, didn't happen there. This is the neckline. Neckline was just broken here, so this wouldn't be an entry, at least not for me. All right, so you see that quasi, and that's exactly where I would be looking for a possible long after it comes back into possible continuation right there, right? So let's mark them for future reference. Let's mark the 50% retracement so we know what areas are likely to be used. There you have an overlap there, so that means we can move this up just like so, and that would be the new structure. Okay, so we have two entry order blocks. Let me mark this. This is not fresh anymore. Right there. Okay, actually, yes, it's still valid. So this would be the other one. There. Right, so whenever price comes back into any of these order blocks, you can start looking for that alignment again for price for that continuation, right? As long as it doesn't just go and leave it behind, you can still use these. That's one thing. Other than that, there isn't anything. So I would be looking for this, right? Since I don't trade lower time frames, all my setups on my main strategy, they need to have the basis, the foundation time frame for me, for my day trades, which is the H4, right? The H4 needs to agree with me. Otherwise, I'm not so interested in the trade. I could scalp it, but for my main strategy, which are not scalps, are high risk reward ratios, I want that that H4 to be, telling me to begin at least the H4. If there's no H4, then I'm not interested. So to me, this is the area that I want to be looking for a long. Obviously, that's not. It's already moved away, but that's exactly what created this order block. So I will have to wait for price to come back. If I don't know that, come back, and then I take my long. Okay, so that's the H4, and let's see if we have some more indications of where price could come back. I like 1, 2, 3. There is one huge area here, which doesn't really help us. This is on the H2 and on the 1. All right. Let us know in the chat if you have any particular pairs you want us to be looking at. We still have 15 minutes, so you still have your chance. Tomorrow we will have, according to Jonatan, 2 matches. 2 matches. You don't want to miss those matches. They're a lot of fun for the viewers, for us, even more so, unless you lose, of course. Unless you lose, which I did. Yeah, I did not want to lose, but it happened. All right. And the worst part was that, if I lost, by trading well, I would be more at peace with it because I did everything I could. But I lost foolishly. That stings even more. Okay. Yes, Cabanez. Yes. I'm sorry to disappoint you. I disappointed myself to begin with. Yes, I too bad I couldn't deliver. Not this time, but I will come. I will have my day. I will certainly have my day. I will actually the thing is, my strategy isn't that one thing. The strategy isn't meant for 60-minute trade period. So that's one thing. But that's an issue that all of us have as traders, because almost no one is trading for 60 minutes normally, right? So you have to adapt to the tournament, to the match. So I adapted. I have done that in the past successfully, but I made some silly mistakes, silly dumb mistakes. So I'm gonna come back, and we'll see how we will do next time. All right, let's see. Let's see. AlphaX asking, why did gold jump up today like that? Let's take a look at today's, right? So we're talking about, you meant today is right here, right? So that is from this moment. Well, the reason that I have is nothing other than, well, there is an entry order block here for the H2, but H2 isn't as strong as I would, as an H4. But that's the first. Let's mark it, and I'll show you what I mean. This is the quasi, right? That's the quasi. That's not nothing. All of that is just nothing, and it breaks the neckline. That's the neckline. Once you're here, you can ask yourself, you can draw the fib, and you can ask yourself, okay, what are the areas of most, in this case there are many, so it's not a great example, but we can go in the lower time frame. There are actually 3 of them, and it's either in this time frame gonna come the reversal, gonna come from the first structure, the second structure, or the third structure. right? You don't know in advance. So in this case, it came from the second, and that was this order block. And if you go lower time frame, maybe we can even spot the reversal in here. So let's do that. Right? That's the area. All right. Let's mark this up. Actually, on the 5 minute, it doesn't show. But let's look at on the lower time frames, right? If you know in advance you have this area on the 2 hour, then you can go to the lower time frames, the 1 hour, the 1 minute, for example, and look for the quasi, right? Whenever we hit this area, this is the 2 hour structure right here. That's the upper border. And this is the invalidation line, right? It comes back, beautiful, right? Beautiful, moves away. Okay, so if you do that, and you use the same structure, the same sequence, the same approach, right? That would be like so. Breaks it, doesn't break the neckline. It continues to lower, right? Makes basically it comes back, but you could use this as the lowest point. See, no, this is the quasi, so that would be the left shoulder. This is the break of that neckline. See that? And in this case, it didn't. This is the 1 minute. It didn't trigger. I wouldn't have been triggered, or would I? Let's see. I'll tell you the exact places. As you can see, I share a lot of my strategy, and there's a lot of edge in there. You know, if I were to not share, I don't share everything, but if I were not to share everything, then I wouldn't be able to show you these entries, right? So this is the 1 minute, right? That's the neckline. So this is the last established downtrend, and it breaks it right here, right? So thereafter you can start looking for the reversal, the entry order block. So let's mark it right here. First time there wasn't anything, right? So this doesn't count. The second time, neither, and here we do have, no, we didn't, actually we did. Yes, we did. Look at that. Look at that beautiful thing. So after it goes up and creates that order block, you have to move your fib obviously to the highest point because it made a new high point. And then you have that entry order block on the 1 minute, and you could, depending on your risk appetite, you can have it as close as $1 something, and or a little bit higher, and you target something that makes sense on the hourlies. It could be something that's visible on the hourlies, right? So that could be, in this case, it could be the top of the whole structure, which would be this. Actually, no, it could be that. That could be the area, or is that the correct one? No, this is the one. There we go. That'll be the area. Look at that. That's exactly how I trade. That is my strategy, right? Even though I didn't tell you everything, there are a couple of things that I haven't shared. With this already, you can be very, very profitable. Maybe I shouldn't share it. I should keep it a secret. No, but it's all yours, man. All yours. You can, use it to your benefit. Work hard. Collect your data, and get those huge payouts, because it is possible. Yes, you can. Join us in our Discord in about 50 minutes or so. Let me check the chat to see if you guys had any questions before we conclude our session today. All right, let's see. Midas, I do like your humor. You have good humor. I like that. Love that. Let's see. What else? Euro dollar. Someone is talking about euro dollar. The monkey. Let's go look what euro dollar is doing on the 1 minute, on the 5 minute. Ooh, look at that. Look at that. I mean, look at that. Right? Isn't that a beautiful, beautiful setup that I didn't take? But isn't that a great, great reaction? Oh, love it. The monkey. Thank you. Thank you for showing that, reminding us to look back. And look at that area. Price comes back. And that's the area you need to be ready with your sniper rifle. Either you put your stop above the whole structure, this point, the whole area that you're trying to short, or just the structure, right? You decide. And then you target, to begin with, the lowest point here or some structure in here. Let's say the last order block, which there weren't any on the 2 minutes, but there was on the 1 minute. This was the last order block, right there. So that could be your target, right? So that would be your target. That could be your target. That's your first level, and you would have been beautifully tapped into TP, and who knows, maybe it will continue, but you're already in profit, right? You pocketed that profit already. I would personally, let me double check with the daily what I would be doing. Yeah, I think the daily move isn't over yet, right? So the expansion on the upside isn't over. At least that's what I think. So I would definitely consider taking the shot here. I mean, taking the TP here and not expecting too much of this, because I think based on the ATR that, you know, there's quite likely a little push higher in price before we, you know, perhaps turn around and go the other direction. May with a quasi or not, that's still to be seen. But that's a very beautiful reaction right there. Yes, that is euro dollar. Let's see, what do you think about dollar Swiss and pound yen? By the way, pound yen had some quite large gaps. At least let me check if it was visible in all price feeds, because I was trading, you know, as the market opened on the day. I wasn't trading, but I was watching the market, and the market had a huge gap. Look at that. Look at that, GJ. You know, gap was into the and I think this isn't even everything that was visible on other price feeds. Huge gap. That's something to, you know, weekend gap, something to be considered when you're trading these pairs. So let's look at the question. We have still 2 minutes, so let's see if we can answer this question. What about dollar Swiss, pound yen position if you want to buy? And I apologize for translation errors. Okay, no problem at all. You don't have to apologize at all, mi amigo. Let's see. Okay, I will be very, very quick. It depends on the time frame, of course, right? So I would, if I were to look for a opportunity here on dollar Swiss, I would want to look from the daily. I see a clear reaction of this daily order block, so I would want to look for reasons to look for a short. And if I can get a couple of these, then I can look at that, right? Did it come back to retest that? It did. It didn't touch it. Okay, but it did here. Okay, so was this was on Friday. Okay, so it already happened. See that order block? Cats back into that order block. That wick touches into that order block and changes direction. Beautiful. I would be interested to short from, actually there is another one here, but that's already, passed, right? So there isn't really anything to trade right now. That's the order block. See, it does not invalidate it and then shoots down. And there was a bearish order block right here, which has been taken out. Right, look at that close right there. So that means that, so it's no longer there. It means that the market is getting ready for a probable continuation. On the daily time frame, let's see what we have. 54, and it's done so far 29. So yes, I definitely think it could have, it's only Monday, and I think there isn't any news. So yeah, so maybe it's not gonna get to 100, perhaps maybe a little less than 100, but you can still safely think it's going to have something like that for a continuation as we speak, right? Something like that would make sense. And but there is no supply area right here. The supply areas are above us, so it's not likely to come all the way up here, but that's the area that I would be interested in selling. Right, so I would want to sell from, there isn't a lot of time, so maybe it's not going to happen anymore, but something like that, right, as a continuation. So that would be my idea for this pair. Looking for shorts and looking for from supply zones, either on the H1, H2, H4, etc. But maybe that's not going to happen. I mean, if you're scalping, you could be scalping this area on the 15 for that continuation, or just wait for price to come back to something, let's say it retraces a little bit higher, something above this, maybe not on the 15 minute, but something else. I don't see any opportunity here, so I shouldn't push that. All right, so that's dollar Swiss, and let's look at pound yen very quickly. We're over time. Right, so we do have a lot of you can see all these gaps. The market is, the bearish structure is not holding at all. Look at that wick, right? And on the H4, it's still strong. It looks very bullish. This high, yeah, I would want to be looking for longs from this side. Right? So H4, waiting for price to come back, and then for that continuation. Something like that makes sense to me. I would think all of these are gone, right? Obviously. In just a matter of time, most likely that this daily will be gone as well. Just a matter of time, I think. Right? I don't know. But looking at market structure, that looks very, very strong. I would, yeah, you could have a little reaction here for sure. This looks good for a continuation reaction. So you will have something like this, right? And then it moves away from it, right? So that would be the idea. So looking for that short here on the long, I mean, not the short, long on this, it would be something. I don't see anything here except there is a little area here on the 15 minute is interesting, but it's not a lot to go with. I need a lot more to, yeah, there is an area there. You can see it on the 30 minute as well. I like it. I do like it. Okay, so, but it seems on the lower time frames, on the 1 minute, it has to, there's nothing. All right, so that tells me that this area, even though I like it, this area is quite weak, right? It shouldn't be doing this. The only time it does this is when it's, it wants to just continue lower. So that tells me that this order block isn't one you want to be using, right? Other than that, there isn't really a lot. I would be working with that. working for a long, not a short, a long from that era. All right, so that's it for these two pairs. I would like to thank everyone for watching us today, being a good company, being great listeners, viewers. Thank you all for your attention. Don't forget to join us on our Discord in about 45 minutes, actually 40 minutes, since we're 5 minutes over time. And let us know in the chat your feedback, what we can do better, what you loved about our show today, and what you would like to see perhaps in the future us doing, because that's what we are. We're here to help you and make sure that you are doing as great as possible. That's it for us today. Don't forget the match. Tomorrow we have 2 matches, so it's gonna be fun, a lot of fun. See you guys all tomorrow. Bye bye.